support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites, We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, Only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Tuesday, June 29th, 2021, and I'm Carol Masser. My co-host, Tim Stenovic, is off this week. Well, choppy trading, we've got that. We've got stocks, though, still hovering near a record. Eco data reminding us of the recovery and supply chain pressures, all of that going on. With that in mind, we're going to talk cruising with the CEO of Royal Caribbean, also talk about commercial real estate with the CEO of Kane International, and then we've got the celebrity couple embracing crypto and Netflix pulling off the perfect heist show. We'll get into that over the next few hours. Let's get you going, though, on this Tuesday with the check on that trading day. Here is Doug Krisner.
Hey, Carol, I think one of the key questions for markets today is on how the Delta variant will impact economic growth. Today's trading in equities, you touched on this, has been a little erratic, mildly defensive, volume on the light side. Information tech leading the S&P and the NASDAQ to extend records. The S&P Information Tech Index right now is ahead by about 0.6%. Overall, the S&P higher by just 0.1%. NASDAQ comp rising 0.2%, and the Dow is ahead by 0.1%. Earlier, Moderna was saying its vaccine made protective antibodies against the variant. Moderna shares right now higher by more than 5%. You know, this Delta variant is fast becoming the more dominant strain in many countries, and on that list I would put France, Germany, South Africa. Yesterday, Moderna received clearance to begin exporting the vaccine to hard-pressed India. In terms of a deal flow, we have Advanced Micro Devices winning unconditional merger approval in the UK to buy Xilinx. AMD shares right now up more than 3%. Xilinx up more than 3% as well. In the bond market, not a lot of movement. We do have the employment report on the horizon. That number is due on Friday. 10-year Treasury right now at a yield of 1.48%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Yeah, that chip index overall, the stocks on fire this year, up almost 20%. All right, Doug, thank you so much. Let's get to the Market Drivers Report. Let's set your business week agenda on this Tuesday. Perfect duo to do that. Vince Signorella, global macro strategist at Bloomberg News, on the phone in White Plains, New York. Dave Wilson, our stocks editor at Bloomberg News. He's there in our Interactive Brokers studio. Heard you early this morning on Bloomberg Radio, Bloomberg TV. How is the market playing out from what you saw this morning versus kind of where we are today here, Dave?
Well, it's like a lot of back and forth, not a whole lot of movement, though. We're looking at basically the lows of the day, pretty much for the S&P 500. You know, the gains among chip stocks really stand out because they kind of developed as the day went on. It wasn't like they kind of started out with the sort of strength that they've shown, you know, for much of the year, as you mentioned. And we went from having practically all the 11 main industry groups in the S&P 500 higher to having practically all of them lower. I mean, the exceptions, technology, which is where you find the chip stocks, also that consumer discretionary category where you find the likes of Amazon.com and Tesla. So, you know, it is a bit of a shift that we've seen over the course of the day. Energy stocks, you know, down at this point. Not much, but lower. Utilities have the biggest declines among those 11 main groups.
Hey, Vince Signorella, so let's talk about that shift. What does that say to you when we go from kind of everything up in the S&P 500 to almost everything down?
I mean, it seems to me that you go from one day to the next, and whatever was up on Monday is down on Tuesday and vice versa. I really just feels like these are system flows just moving in and out of asset classes on a daily basis, just trading. I mean, there's no real logic behind it, and it has that feel that people are just, you know, trading to make money but not holding anything for a very long time. And maybe it's because we have the jobs data coming up and traders don't want to be committed and hold on to something or hold on to big positions going into that. We've been disappointed 2 months in a row, and more people I talk to than not are thinking a pickup in services jobs is going to lift us once again, and we're still waiting to see if that happens.
What about, though, end of the month kind of reconciling when it comes to portfolios? Dave, is that part of it? Well, or how does that play into it, if at all?
It may just be an excuse to kind of stand pat. I mean, consider what we've gone through in the last couple of weeks. I mean, you had the quarterly expiration of futures and options, what's kind of gone back to triple witching. Then, last Friday, you had the annual overhaul of the Russell indexes, the reconstitution as it's called. So you've had these flurries of trading tied into that. And maybe we're just getting to the point where people really just want to look ahead. You got a jobs report coming out at the end of the week. Right. You got second quarter earnings to get through. So perhaps not a lot of incentive to trade after all the trading we've seen in the past week or two.
I'm just going to say it. You guys aren't being very helpful. Vince, give me something to seize on to.
I'll give you something. I did this for the blog this morning. I took a look at non-farm productivity going back about 50 years.
Okay.
And as we exit a recession, and well before we exit a recession, we see a surge in non-farm productivity. And we're seeing it once again. And every single time non-farm productivity has jumped sharply as we've exited a recession and saw a spurt in economic growth. We're seeing it again. It suggests better returns for equities, I think, than bonds over the next 6 to 12 months, because any increase in prices, if you're seeing an increase in productivity, that's efficiency. It would mitigate some of those cost increases. Higher bond yields, bond buyers can't shed those losses to anyone, so they're going to eat those. So over the next 6 to 12 months, I would bet we might see better stock returns than bond returns.
We are also in this kind of Netherland. And Dave, I know I'm a little bit of a broken record. I love and hate earnings. I feel like earnings sometimes hold companies, their feet to the fire in short terms and doesn't maybe make the necessary longer term investments that they need as a company and looking into the future. At the same time, it is our quarterly check on what companies are up to, and we get to hear from CEOs. And maybe we're just kind of waiting for that next round to figure out where do we go.
That's just it. And it's not just about the next round of earnings. It's about what companies have to say about the second half and even next year. Because, the second quarter, you got to remember that all the comparisons are going to be skewed by the fact that the coronavirus pandemic was really taking over at this time last year. So, as a result of that, a lot of companies suffered. And so their results are going to look really great in terms of percentages, but you have to kind of get a sense of where the business is. Maybe you go back 2 years. Maybe you just focus on the outlook. But just looking at the quarterly figures is going to be a bit of a misleading picture at this point.
That's true, Vince. We're all waiting for we're waiting for clean data. We've heard the Fed members talk about this, that maybe when we get to September, when we get beyond those virus-skewed data points, that maybe we start to really get a truer picture of what's going on in the economy and ultimately the markets.
Yeah, I think Dave makes a very good point. We may not have a real clear picture until this time next year. You have these sort of black swan events, for instance, like Brexit for sterling, where you had this big outsized move. Well, when you go back to try to do a chart on that and do a comparison and do any kind of statistical analysis, you can't actually throw that anomaly out, but you can't exactly really use it and figure it in because it is a one-off. And so it takes a while for the data to sort of catch up again, where you can start to rely on a lot of the technical analysis and a lot of the mathematical stuff that you've relied on before. So I think the pandemic was that kind of an event, and the further we get away from it, or the farther we get away from it, the better we will be able to make comparisons and really see where corporations are stacking up and where all things are stacking up.
So we'll all just take a vacation until we get through this, huh? All right, I just said it. I know, we're all in. All right, Vince Signorella, thank you so much. Global macro strategist at Bloomberg News. Check him out at Macro Squawk Desk. You can find him at SQUAGO on your launchpad. Dave's going to be later on back with his chart of the day. Let's do the bite of the day, Business Week bite of the day, one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, 270. United is overhauling its fleet with the biggest jetliner order in company history and an upgrade for its aircraft cabins. The airline agreeing to buy 200 Boeing 737 MAX jets and 70 Airbus A321neo planes. It's a deal valued at about $15 billion based on estimates by aircraft appraiser Ascend by Cirium. Those and others will get a revamped cabin with seatback screens and larger overhead bins. But if you're still waiting for peanuts, don't hold your breath. All right, you are listening to Bloomberg Business Week. We've got a lot to cover over the next few hours. In the meantime, we do want to get a check on world and national news. For that, it's to our 99.1 newsroom in the nation's capital and Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden and First Lady Jill Biden are planning to visit the site of the deadly Florida condo collapse, and that visit will be this Thursday. This is the 6th day of searching for 150 people still missing in the Surfside condo collapse. Maggie Castro is with Miami-Dade Fire Rescue.
Chances of us finding someone alive is diminishing with every hour that passes, but we're always going to remain hope, and we are still in a rescue mission.
Castro says some families of those missing have come to the site to start processing the situation. President Biden is on the road today to sell his more than $1 trillion infrastructure plan. He's in La Crosse, Wisconsin, a more rural area, where he's speaking right now about the deal he reached with senators. Bloomberg government's Emily Wilkins says Biden has carefully selected the area for political reasons.
There is a big Senate race there. The seat's currently held by Republican Ron Johnson. Democrats believe this could be a great state for them to wind up picking up a seat. And so part of the idea is that if President Biden gets out there, sells this infrastructure plan that Democrats are then able to pass, they're going to start making inroads there with voters.
Wilkins says rural Wisconsin needs broadband, which could lift his standing with voters there if the infrastructure bill is passed. The Supreme Court has ruled that the government can indefinitely detain certain immigrants who say they will face persecution or torture if they're deported to their native countries. Over the dissent of 3 liberal justices, the court held through 6-3 that the immigrants are not entitled to a hearing about whether they should be released while the government evaluates their claims. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, it's the handful of words we are all fearing. The probability of a black swan event is rising, and that's a quote in a recent Bloomberg News story right now on the Bloomberg terminal. Let me bring in Doug Krisner of Bloomberg News and Bloomberg Daybreak Asia. Doug, we are increasingly having this conversation. Vince Signorella brought it up yesterday that he was surprised that the markets were continuing to kind of shrug off the rising concerns about the Delta variant and the rise in cases that are caused by the Delta variant. That is one of the big questions out there.
I think it's a very important issue, especially when you look at what's happening in the Asia Pacific. Australia overnight imposing a lockdown of its 3rd regional capital. We had Hong Kong banning some flights from the UK because of the Delta variant. Cases are also up in Tokyo, and we're a month out from the beginning of the Olympic Games, so there is a lot riding on this. What's interesting, too, in terms of the confluence of events, this Delta strain is kind of coming onto the scene in a major way around the time that we're talking about Fed tapering. And if you remember a couple of weeks back, the IMF warned the Fed that if it moved too aggressively, that it could have very poor consequences for the emerging market community where currencies are concerned. And so you've got to really take pause in that, because I think the ramifications for the market more broadly are maybe a little greater than people understood before.
It's a good point, and you do wonder if strategists, investors in general, Doug, have kind of ruled this out at this point, thinking, okay, we're on our way to recovery, there's no turning back. And as we know, with COVID in particular, it's not been a straight path forward. And you do wonder, maybe also as temperatures get cooler once again here in the West, in the United States in particular, whether or not there is the potential for another wave, especially as I know there's a great story on the Bloomberg that just talks about vaccinations. They're up in the U.S., we're doing well, but if you look at particular regions in the south of the southern portion of the country, not so great, and you do worry about breakouts.
That's right, that's right. We'll talk more about the virus story as we continue here, right?
All right, good stuff. Thank you so much. Doug Krisner, you're listening to Bloomberg Business Week. I'm Carol Masser, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So I think it's safe to say that one of the key questions for markets today, how will the Delta variant impact economic growth? Today, in the equity space, trading has been a little erratic, mildly defensive, volume on the light side, and we have technically the S&P and the NASDAQ each extending records, largely because of the leadership coming from the information tech space. Right now, the S&P 500 information tech group is up about 0.6%. The Dow, for its part, up 0.2%. The S&P higher by just 0.1%. And the NASDAQ composite moving ahead by about 0.2%. Interestingly, in the small cap space, the Russell 2000 is down about 0.4%. So Moderna is saying that its vaccine made protective antibodies against the variant. Moderna shares right now higher by 6%. Also moving, some of the chip makers. Advanced Micro Devices has won unconditional merger approval in the UK to buy Xilinx. AMD shares right now up just about 3%, and Xilinx shares higher by about the same amount. We got the employment report on Friday, and very little movement in the bond market right now ahead of that number. 10-year Treasury with a yield of 1.48%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Kind of in a little bit of a holding pattern ahead
I would
of
say.
that. All right, Doug, thank you so much. So this story is among our most read on the Bloomberg today. It's one that reminds us that it is important to go behind the headline data points. In this case, it's about the growing gaps in U.S. vaccination rates and what that shows on a regional level. Bottom line, it's not so good. Here to tell us more is Andre Tartar. He is Bloomberg News data journalist and editor. He's in our Bloomberg Interactive Brokers studio. Nice to have you here. Tell us about the story.
Thank you so much for having me. So the CDC came out with some county-level data last week on the number of people with at least one dose, which gave us a much more complete picture of the state of the vaccination drive. And as you mentioned, even though the national number appears to be, it's going up, we're approaching 50 or more percent of people, at the county level, the gap is huge. The most vaccinated counties are now have more than 60% of their people are vaccinated. The least vaccinated counties are under 30%,
which is troubling because this, Andre. The whole goal was getting herd immunity, right? That's how you this is how you get rid of COVID-19. We're not even close, depending on where you are in the country.
And on top of that, we now have the Delta variant, which is beginning to spread. It's much more contagious. And so it's a huge threat, really, to the recovery of the U.S. and actually getting out of this pandemic. And kind of as the story goes into, there are several factors which do associate very heavily. And so, as you mentioned, in the South, there's a big cluster of these lower vaccinated counties, also in the Midwest. And these tend to be either more rural, places that do lean perhaps more Republican, but also, kind of lower incomes, lower education rates. And so the challenge now is kind of how to get that last mile, how to get those vaccines into those counties, really.
And you and I were talking a bunch, just kind of yearning for the world to go back to the way it was and wondering how this Delta variant plays out. This is the question we all have. We're talking about it earlier about how it plays into the financial markets, whether or not we ultimately will have some kind of pullback, shutdown again in pockets, perhaps. We're seeing that in some European nations, and that shows that the progress to getting out of this is going to take a little bit longer than we all thought. That's why we care about this and these pockets, because these pockets can lead to increases in cases and ultimately maybe a spread through the general population.
Absolutely. As you've said again, the national picture doesn't tell you everything. And really, the vaccine it's a local phenomenon, right? It's happening in our communities. And so as this data shows, while there are these pockets of under-vaccinated areas, the vaccine has space to grow and to mutate and change. And that's that much longer that we have to wait until we can really move on, reopen fully, and get back to the economy as normal.
Right, because the virus is constantly looking for a new host. You write in your story, gaps in vaccination rates can leave smoldering embers of infection ready to set an epidemic newly ablaze elsewhere. And they can create fertile ground for new mutations, giving the virus a chance to evade vaccines. That's the tricky part. That's the conversation I feel like we have been having over the last 12 to 18 months. In particular, it's not just about dealing with the virus that's in front of us, but we have seen these variants and they can get stronger and then they can get kind of evade the current line of vaccines and then we kind of start all over again.
I mean, just simply look at the UK. It has among the highest vaccination rates in the world, and it just had the highest case numbers since January because of these new variants. So, just having a lot of people vaccinated overall doesn't get you there. It really has to be consistent across the population and across the whole country.
This story also plays to one of the other themes that we have been talking about the past year, and that's just the increasing gaps in our society that have been laid bare by by COVID or created because of COVID. And we're seeing this, and as you said, it's not just a straight assumption, it's a political divide. It can be education, it can be a lot of different things.
Absolutely. And it's certainly hard to know causality here. I mean, whether it's vaccine hesitancy or being fully, anti-vaccine, there are still accessibility issues, certainly among certain groups. But this data does allow us to really see some very strong correlations. And some of those kind of, as I mentioned, are income, education, political leaning, and so being aware of those can at least help our policymakers, our governments target the education campaigns and the vaccine rollout further.
The other thing I thought that was interesting is you point out counties with relatively more children. So Texas, Kansas, Mississippi are also more likely to have lower vaccination rates as a result. So there are a few factors at play. If there's a lot more kids within a particular county, you're going to see probably lower vaccination rates.
Well, yeah, because of course, at the moment, the vaccine isn't eligible for children under 12. And so there are counties that just have a younger population. Therefore, they have just they just have a built-in kind of, lower ceiling on their vaccination rate until we do have approved vaccines for children. And so as we see, many of those areas are exactly the areas where we do have the low vaccination rates, which makes it that much harder in those places to really get there.
It's just like added to the list of worries.
It's a lot.
You do include in your story Kaiser Family Foundation suggesting that about 13% of Americans plan to avoid the vaccine no matter what. Another 12% say they are waiting before making a decision, and 7% will get vaccinated only if required. So we could see the needle moved a little bit, especially because you're starting to see employers saying, we're not going to get rid of you, but if you want to come back to the office, you got to get vaccinated.
I mean, that's actually somebody today was saying that really the world now is increasingly structured for the vaccinated. And so I do think there will be those pressures from employers and so on that will get us there further.
We thought it wouldn't get there, but it did, or it is increasingly. Andre, thank you so much. Andre Tartar, he's data journalist and editor of Bloomberg News here in our Interactive Broker studio. Coming up, we're going to talk about the individual who's probably the most listened to voice on Wall Street. There's a most read story on that one as well. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is, and if I look at the most read stories on the Bloomberg in the past 8 hours, there's a couple that have to do with Jamie Dimon and JP Morgan. Actually, if I go down to number 14, there's 3 stories on Jamie Dimon and JP Morgan. We're going to talk about that in just a moment. First up, though, let's get back to your top business stories and another update on that trading day. Here is Doug Krisner.
Hey, Carol, markets seem to be grappling with the question of how the Delta variant might impact economic growth. Now, you put that concern in the context of an S&P 500 with a current PE of 30 times and a forward PE of 22. Technically, the S&P is at a record, but we're holding on to a very slim gain. It's less than 0.1%. Same is true where the NASDAQ comp is concerned, stronger by about 0.2% following yesterday's record high. Generally speaking, today's trading in the equity market has been erratic, a little defensive at times, volume on the light side. Leadership obviously coming from information technology, but we also have, moving to the upside, consumer discretionary. Every other group within the S&P 500 is actually weaker today. Dow Industrial Average right now is ahead by 0.1%. Keeping a close eye on Moderna, those shares rallying to a record high. The company is saying that its vaccine made protective antibodies against the Delta variant. We also have some of the semis being actively traded. Advanced Micro Devices has won unconditional merger approval in the UK to buy Xilinx. We have AMD shares right now up nearly 3%. Xilinx ahead by a little more than 2.6%. 10-year Treasury now yielding 1.47%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much, Doug. Appreciate that update. Well, he is probably the most listened to voice on Wall Street. His actions followed very closely as well. We're talking about JP Morgan's Jamie Dimon. Today he was at the inauguration of the company's new headquarters in Paris. One more thing, JP Morgan is also upping its pay for junior bankers. I told you there was a lot of most read stories on JP Morgan today. Why we care and the significance of it all. Let's get into it with Bloomberg News Wall Street reporter Sonali Basak. She's here in our Bloomberg Interactive Brokers studio. So Jamie Dimon, right, we watch everything he does. It's like we have a tracking device on him. Paris, first of all, this is a big deal as we come out of Brexit and figure out what's going to be the center of the financial universe over in Europe.
Absolutely, because this has been a years-long story, hasn't it? It's a matter. It matters
for some, right?
And then some. It matters for talent. It also matters for these countries. You wonder once they start to move their trading hubs, what other economic activity comes out of there. You know, last time I went to London, which was obviously well before COVID, when I was talking to all the investment banks, a lot of them are moving a lot of staff and building offices up in Paris because of the big multinational corporations that were building, doing deals, and there was just so much activity there. So, you know, Frankfurt was the other real place.
That's what I thought.
The critique I've heard about Frankfurt, which is kind of funny, is that you find yourself either hiring from Deutsche Bank or you find yourself hiring your best talent in London anyways. So, you know, that's some color on the ground for how hard it's been to pick your spots when it comes to Europe.
Well, and it's interesting because it's not just JP Morgan. Goldman Sachs signed a lease in Paris for new headquarters. We've seen Bank of America opening new offices over in Paris. So we are seeing it slowly but surely being
the
set up.
lifestyle's really good too.
The lifestyle. I was going to say, does Jamie Dimon just want some foie gras or croissant?
Right? There's also market share to take, right? I mean, the French banks are certainly very big, but they're not big in the same places that JP Morgan is.
All right, speaking of JP Morgan, another story about them hiking their entry-level banker pay to help combat burnout. First-year analysts now being offered starting salaries of $100,000. What is going on more broadly? It's not just a JP Morgan thing, is it?
Not at all, though it is exciting to see for JP Morgan for many people, given that they are the biggest bank in the country. They are usually number 2 or 3 when it comes to mergers and acquisitions, competing neck and neck with Goldman Sachs in the space. More than $1.8 trillion worth of deals in less than 6 months alone.
Busy.
It's been a very busy industry.
How much of that is SPACs? No, just kidding.
Well, some of it is.
Yeah.
Some of it is certainly SPACs, but they need these junior bankers to get these deals done, really train up their ranks. They're cheaper than senior bankers, although senior bankers are certainly moving around a lot. We see it every single day, and one president of one investment bank told me every day he's coming in to another banker who's threatening to leave.
Wow. So it just gives you an idea, some color on that. Well, what's interesting too, right, Shanali, is these big banks, they invest in their investment banking hires, the folks that come in off of MBA programs and so on and so forth. They invest in them, cultivate them. They don't want them to leave.
They don't. Well, it's funny.
Or do they?
They expect a good amount of them to leave after some point. That's the business model. You hire a ton of people. Some of them go to private equity. They become clients. Then, that relationship really continues and it kind of feeds into itself. But the people who stay, certainly they want them to keep staying and keep delivering and really grow up and become a pivotal part of that bank. Fun fact about Goldman Sachs itself is that actually about 80% of its entire talent base is millennial or younger. So that goes to show you how young and lively an investment bank is and how much their young people really matter.
Okay, speaking of the banks, one more story I want to get to, and it was something we were all over last night, all the headlines about quarterly dividend payouts, boosting buybacks. Morgan Stanley seemed to be a real standout there.
Yeah, it certainly was, and I keep on guiding people back to what James Gorman said a couple of weeks ago. We're sitting in an embarrassment of riches. He predicted, he was trying to tell investors.
He calls it like it is, doesn't he?
He really does. And, like he said, okay, you want us to invest in our business? We just did 2 of the biggest deals since the financial crisis. So, they're investing in their business. They're certainly putting money to work when it comes to clients. So they had this money after a record year to start giving back in a bigger way.
Right.
The commercial banks are where you start to face more political pressure on lending and balancing that with investor payouts.
And do we see that kind of play out in terms of the distinction between, because I think I was surprised when JP Morgan passed, and I thought, well, that wasn't a really big boost or anything new, right? There were some that it felt like
Well, Jamie Dimon did say that, he was going to be increasing dividends, he was going to be returning more money to shareholders, but they want to be investing in that business as well. So you saw, for example, JP Morgan agree to buy a fintech today, Open Invest. So it's something that shows you that he's willing to spend money. His strategy has so far been bolt-on, these tinier acquisitions that will add a capability to make them competitive in a particular area, and particularly tech-enabled and ESG-enabled areas.
The big banks still pushing everybody to get back to work, even though they've had an incredible year and they seem to still be doing really well?
Only the biggest of the big. The smaller banks are trying to retain talent, attract more people to them. Lazard's CEO, in a conversation just an hour ago, had told me they're going to only require people back 3 days a week in North America and are trying to have that work around the world. He said it's unimaginative to believe that the world can't be different after COVID.
I just did a panel with CEOs, same thing, that we need to think of work differently. Industrial revolution required everybody to be in the same space. We're going through another revolution.
What revolution is this one?
I don't know yet.
We have to name it.
The Zoom revolution? I don't know. That sounds, I don't know.
The COVID revolution, unfortunately.
Something like that.
Yeah.
Thank you. We went around Wall Street, covered it all. Shanali Bossack, she is our Wall Street reporter here at Bloomberg News in our Interactive Broker studio. We are seeing some of those big banks move around a little bit following the news of either upping dividends or payouts. Morgan Stanley, really one of the outperformers. That stock is up 3% at $90.40 a share. All right, let's get back to world and national news and to Nancy Lyons. She's in our bureau in the nation's capital. Hey, Nance.
Hey, Carol. President Biden is in rural Wisconsin touting the bipartisan infrastructure plan that Congress is considering.
This is a generational investment to modernize our infrastructure, creating millions of good-paying jobs. And that's not coming from me, that's coming from Wall Street.
Biden's infrastructure plan does feature broadband expansion into rural communities and provides improvements to transportation networks that would be key to speeding crops to market. But some farmers are worried about Biden's proposed changes in the estate tax, which would make it harder to pass farms down to the next generation. Search and rescue efforts continuing around the clock in Surfside, Florida, at the site of the beachfront high-rise that collapsed last Thursday. The president and first lady plan to visit the community this Thursday and meet with first responders and families. White House Press Secretary Jen Psaki says administration officials are offering as much support as they can and sending a team of scientists and engineers to the site.
We are providing every resource we can from the federal government, not just to help with the search and rescue operations, but to be a part of any effort to determine if an investigation should happen moving forward. That's something the president supports, and that's a way we can be constructive from the federal government.
Psaki says during their visit, the Bidens want to make sure that officials do have the resources they need. Officials say prosecutors in Florida will be pursuing a grand jury investigation into the condo collapse, and the state attorney, Catherine Fernandez-Rendell, says jurors would need to decide whether to launch an investigation and then determine its scope. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
So the competitiveness war is definitely on. I'm Carol Massar in our Interactive Broker studio. Joining me once again is Bloomberg Daybreak Asia anchor Doug Krisner. Doug, I don't know how much you folks have talked about this on Daybreak Asia. This is, of course, the story about the House passing two bills that happened yesterday that are expected to form the core of legislation in the chamber designed to boost U.S. R&D in response to China's challenge to U.S. economic supremacy. I mean, this is about the U.S. saying, okay, we're going to put the government's might behind our industries, just like China is doing behind its domestic industries.
Yeah, it's kind of interesting because, you know, during the trade war under the previous administration, the U.S. criticized China for doing just that, supporting certain industries. Now, we obviously aren't talking in the case of the U.S. about state-owned enterprises. No. There were even some Republicans who were against the idea of allowing the government essentially to pick winners and losers. In the case of the semiconductor industry, look at that Senate bill, right?
Right.
$52 billion to fund the semiconductor industry in terms of R&D.
Right, but we did that a few years ago. Remember back when there was a...
Went to the moon with it, right?
Right.
That was the whole NASA project. Look at Boeing, look at IBM. We've been here before, but I think it's a little more complicated now given globalization.
Exactly, and you do wonder what is a country's responsibility in terms of shoring up some of their industries, although many would argue that that's what Europe did with their aerospace industry, and to some extent maybe the U.S. did with Boeing as well. What's the responsibility? And then China kind of reacting back and saying that they firmly oppose efforts to target and use China as a pretense, and that what China's doing is to help their people live a happier and better life. I'm paraphrasing some of the response from the Chinese foreign ministry, but maybe they're right, and you know they're just helping out their citizens have a better way and help out their industries. I don't know. It's
complicated because
it's complicated
because beyond semiconductors, there's the issue of solar panels, and then on the security side, telecommunications equipment. So it's a very sticky point.
Right, and playing fair, and then also privacy issues as you really get into, as you say, it's rather complicated. All right, you're listening to Bloomberg Business Week. Carol Massar, Doug Krisner giving me there an assist, and you are listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Markets have been struggling through the day with the issue of how the Delta variant might impact economic growth. Overnight, we had Australia imposing some new lockdowns. Hong Kong banned flights from the UK given rising infections there. And cases are also rising in Tokyo with less than a month to go before the beginning of the Olympic Games. Right now, we have the Dow essentially flat. The S&P is now down from a record high by 0.1%. NASDAQ Composite holding onto a very slim gain. It's less than 0.1%, so technically we are extending a record. Relative strength among some of the information tech stocks, however, we have airlines, hotels, cruise lines, all moving lower today. The S&P 500 Airlines Group down about 0.7%. Yesterday, this index was down more than 2.5%. And the S&P 500 Hotels Sub-Index weaker by about 0.5% as well. And look what's happening in the bond market. Yields are falling. 10-year Treasury right now with a yield of 1.47. Dollar strength, though. Bloomberg Dollar Spot Index is rising 0.2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, the Heist Issue, it's coming this week. It's a great summer read, stories that take you to places and people that will shock you, surprise you, charm you, and that includes this story, which happens to be about the perfect heist, courtesy of Netflix. Let's get into it with Business Week Projects and Investigations reporter Devin Leonard sitting right next to me in our Interactive Broker studio, along with Business Week editor Joel Weber also sitting next to me. And as I said, both in our studio. I know, Joel, you get so excited about this issue.
Heist Issue is the best issue. Highlight of our year. It is a little bit like Christmas. Just Christmas in almost July.
Almost.
So when we put this together, we think about a bunch of different things, including just stories that make headlines earlier in the year. For instance, this copper heist that we turned into a comic in this issue that we also published today. But we also have to think about the cover, right? And so for the cover story, I really wanted to talk about how Netflix has done a great job of perfecting the heist genre. They have a show called Lupin, and I became, a little interested and, dare I say, obsessed with it.
I'm just going to say obsessed, it sounds like.
I mean, it's just like if somebody else is doing heist-related content, you're like, what are they doing? And the star of that show, French actor named Omar Sy, and he is extremely charismatic. I thought the show was really interesting. Of course, they were going to do a second season because the first season was so good. And I was like, when is that second season going to drop? Oh, and it turns out it's like right when we're doing our heist issue. So it all worked out perfectly. And Devin Leonard stepped up to write the cover story about Lupin and its star. So Devin, what did you learn as you reported out the story?
I don't know. I guess it's just the perfect combination of this classic French story about. I think it's a character a lot of Americans don't know about, but everybody in France knows. I mean, he's basically a mischievous sort of Gallic Robin Hood who loves to steal from the rich. And Gaumont, which is a big French film and TV studio, they wanted to do sort of an updating of Lupin. I mean, the trillionth update. And Omar Sy, who's really famous in France, people don't know him so well in America, even though he's played bit parts in X-Men movies and Jurassic World and things like that. They went to him, Gaumont, and asked him what role he wanted to play, and Omar said Lupin. But then he read a bunch of scripts, and it didn't really work. So basically, they brought in an English showrunner, a guy named George Kay, and he basically made the show about a guy just like Omar Sy. Omar Sy's parents are from Senegal, so they made Lupin, a Senegalese immigrant who was obsessed with the Lupin character and sort of basically became a great cat burglar and heist master. That's the story. Yeah,
he's a lot of fun. It sounds like, right? And he's got some there's not a lot of guns or anything. Like he's got some rules about how he does it, and he kind of does it. I almost feel a little twinkle in the eye and a little smirk, a little bit.
Well, no, I guess that was part of the research, and that a lot of the research was actually finding out how you make a great heist movie or a great heist show, and then sort of talking to them, also just watching how they sort of followed all the rules. So So I mean, you have to start, with the character that the audience likes, and Omar Sy is just, he's just totally likable, and that's his whole thing. As one of the directors said, he has a smile that, how do you say it in English? Lets you get away with murder. I mean, that's it. Yeah.
But I'm bummed.
I also love that he's approached it sort of as trying to be like the French version of James Bond, right? It's like there's an enigma to that. So what does this show accomplish for Netflix?
Well, that was the other thing that I thought was really interesting, Joel, was that just look at where Netflix was at that moment. In January, they'd had this crazy year in the pandemic. They added 37 million subscribers. That's almost a 20% increase. So, and at the same time, during 2020, they'd had all these shows already in the pipeline coming out. They had a bunch of new shows that were just setting records because everyone's just sitting around watching Netflix, and ordering pizza or whatever. So
I had some Saturdays on the couch in my jammies. I'm just gonna put it out there.
So the Queen's Gambit, I see 62 million people watched it in its first 4 weeks. Bridgerton sets the all-time record for a new.
I don't think I've heard of Bridgerton.
Yeah, maybe not. Yeah, come on. You crushed that weekend.
Watched
one.
it twice.
Yeah. Right. That was 82 million people watched it. So then, but by the time Lupin, January rolls around, they're all of a sudden, whoa, they don't have as many new shows. But they did have Lupin. That comes on. That's a French show, but even in America, it's the first French language show to hit Netflix's top 10 shows in the U.S. 76 million people watched it, all around the world. So that basically Netflix, in effect, they ran short shows. They had this huge audience, and they popped this show out there, and everybody watched it, and everybody loved it.
And I also think it's important to keep in mind here how global Netflix is, right?
Yeah.
The bulk of their business, right, actually is international. So for them to have a hit, like a true global hit, and lean into also an international studio, I mean, it speaks to a little bit of how Netflix makes its magic, right?
Well, no, I think that's their, what they think is their edge now, is that they're producing shows in other countries that can, be hits, can be authentic, in those markets, but be global hits too. And, I think what they would say was Disney Plus isn't doing that, or they're trying to do it, or, Amazon Prime isn't there yet, but we're there. So I think, and that's where they have to grow, because, people kept telling me, almost everybody in America who's going to subscribe to Netflix already has. So.
Well, and it's interesting, too, we were talking to Tara LaChapelle just about how Netflix is really causing all these other content providers having to go out and buy content, and that Netflix just is really good about bringing in directors and actors to create it for them, rather than having to spend billions and billions on buying another company. And it just shows that they do it, and they do it really well.
Well, I mean, in this case, they did work with a local production company, but they brought in, George Kay's guy. They brought in. He worked for Netflix before on Criminal. Louis Leterrier, who directed the first three episodes. I don't know if they brought him in, but he's done a lot of work for Netflix. So they're definitely involved in a lot of this stuff. They're not just buying stuff.
So you really dove into the heist genre. Tell me, just to close, what's the secret of a good heist?
And really quickly, like 20 seconds.
The secret of the heist is that there has to be a heist within the heist. The heist has to go wrong so that you can really kind of see what the characters are really like. And actually, the heist goes wrong. It has to go wrong for the heist to go right. Anyway, that's it.
There's a lot of rules in that story. All right, good stuff. Really appreciate it. Devin Leonard, he's Projects and Investigations reporter at Bloomberg Businessweek. It's the cover of the issue, right? Of the heist issue. Joel Weber, our editor of the magazine. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Businessweek, we're going to continue. If you're listening on 106.1 in Boston, Bay State Business is up next. That heist issue hitting newsstands later on this week, online and on the Bloomberg Terminal.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 p.m. on Wall Street. We have an hour remaining in today's session. Generally speaking, markets have been struggling with the question of how the Delta variant is going to impact economic growth. Today, trading in the equity space here in the U.S. has been a little erratic and mildly defensive. Volume on the light side, and now we have the S&P 500 essentially flat at 4,290 after a record high yesterday. On the positive side, information technology, consumer discretionary out in front, but we're seeing weakness among utility, consumer staples, and financial shares also moving lower. Moderna, one of the bright spots, stock is up more than 5%. The company saying its vaccine-made protective antibodies against the Delta variant. This is becoming one of the dominant strains in many countries, including France, Germany, and South Africa. Yesterday, Moderna did receive clearance to begin exporting this vaccine to hard-pressed India. We are seeing weakness among some of the airlines, hotels, even the cruise lines down today, with the S&P 500 airlines group off about 0.7%. This is after dropping 2.6% yesterday. On the positive side, some of the chip makers are pushing higher today. Among them, Advanced Micro Devices shares are up about 2.8% right now. The company has won unconditional merger approval in the UK to buy Xilinx. Xilinx shares up nearly 3% at the moment. In terms of eco data, U.S. home prices jumped the most in more than 30 years in April. Consumer confidence soaring in June to a fresh pandemic high. And if you look at data from the Conference Board, it also shows the spread between consumers who think jobs are plentiful and those who think they're hard to come by. That spread is now the largest since 2000. Historically, this only happens at the end of an economic cycle. We've got a 10-year Treasury down in yield by nearly 2 basis points at 1.47%. I'm Doug Prisner in New York. That's the Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So you might recall the Bloomberg Big Take that we talked about yesterday. It was about the last and only foreign scientist in China's Wuhan lab speaking out and painting a very different picture of the Wuhan Institute, someone who has been out there early on when it comes to looking at that institute and China's role when it comes to COVID-19. He's been talking to us, he's been on 60 Minutes and talking to a lot of other folks and writing about it to get to the bottom of the origin of COVID-19. And just yesterday releasing as part of a group an open letter entitled Call for a Comprehensive Investigation of the Origin of SARS-CoV-2, if possible with Chinese government participation. We welcome back Jamie Metzel, Senior Fellow at Atlantic Council, former Director on the U.S. National Security Council at the State Department and on the Senate Foreign Relations Committee, founder and chair of the global movement One Shared World, and special strategist for Wisdom Tree. He is on the phone in New York City. Jamie, it is good to have you back with us. You are part of a group that have put out another letter. I think this is the fourth open letter when it comes to the virus, and in particular finding out China's role in all of this. Tell us about this latest letter. And this is really building on some of what came out of the G7 meeting.
Exactly. So thank you so much, Carol. Really happy to be back with you. So so this is our fourth open letter. We're a community of experts from around the world. And what we've done is we've welcomed the statement that was put out by G7 leaders earlier this month. It was calling for a next phase of what's called the WHO, World Health Organization, convened joint study. And what we said is we welcome that call. But for that to happen, we need a credible process. And because the first phase of that study, which was joint between an independent committee and their Chinese government-affiliated counterparts, was not credible or legitimate. The Chinese government had a veto over who got to participate. They didn't share information. They had limited access to the raw data. There were lots of big structural problems. We said is for this next phase to go forward, it has to be legitimate. It has to be a full, comprehensive investigation. We laid out what the terms would need to be. And we say we believe it's reasonable to give China 60 days to accept those terms and to have full investigators and empowered investigators on the ground in China, able to do a full audit of their labs and do the full investigation that's required. But that if China should continue to refuse to prevent the kind of full investigation that's needed, then we have to establish an alternative process, probably not through the World Health Organization, but through some other means, and whether it's G7 or OECD or something else. Because one thing is clear, we can't give China a veto over whether or not we investigate the worst pandemic in a century.
And I would assume, Jamie, that you would feel that if conversely the virus had started here, you would expect the United States equally, or whether it was in London or whether it was somewhere over in Europe, that they would need to do the same thing, basically cooperate, collaborate on a full investigation.
Absolutely. I mean, I would have this equal position. I mean, it's just, if this happened in the United States, we would demand it. Everyone in America would demand it. We wouldn't need foreign countries and outsiders to say we need a full investigation. If we had 10 million people dead or 600,000 dead, and we thought that there was some possibility it was connected to a nuclear accident or a biological accident, we would demand that. If there was any other country in the world, if this happened in Congo and the Congolese government said, oh no, you can't do an investigation, we would go berserk. And so it's just totally unacceptable that China, one, is doing a massive cover-up from the beginning until now, and two, that it's preventing the kind of international investigation that's in everybody's interest, including everybody in China, other than maybe a small number of people at the very top of the Communist Party.
I mean, Jamie, this is getting to the heart of really understanding how COVID came to be. And I know everybody in this audience has done a lot of reading about it. I certainly have. I feel like there's been a lot in the last week. Our own Michelle Cortez, catching up with the Western scientist, the last and only foreign scientist who was in the lab, who spoke out and gave her experience of what she saw. But we want to know how this came to be, correct? So that we can prevent it from happening again in the future.
That's exactly right. I mean, when a plane crashes, we try to understand what happened because we know that's a serious risk. Here we have this terrible pandemic. We need to understand how it started.
Jamie, it's like, there's a good chance that there isn't going to be Chinese collaboration or cooperation at this point. So what then, as a recourse, should the United States or the Western world, European nations, what then ultimately can they do to help get to the bottom of this?
Yeah, so we write about that in the letter, and what we say, and I hope you'll post the letter on the Bloomberg website so everybody can see it and read it. But what we're saying is, even without Chinese participation, Chinese government participation, there's a huge amount of information that is available. There's genetic information. There's information even in U.S.-based, U.S. government-funded not-for-profits like EcoHealth Alliance. The scientific journals have information. There's a lot that can be done, but we need a concerted international, national and international process for pulling all of that data together. I mean, obviously, it's better if China participates and China has the full transparency that we would like. But again, we can't give them a veto. If they want to continue to carry out this cover-up, we shouldn't be part of it. We should do everything within our power to get to the bottom of things, and maybe we can. There's a reasonable chance of success. We've made a huge amount of progress over the last year and a half, even without any meaningful access in China.
All right. Good to get an update from you on this. Jamie Metzl, Senior Fellow at the Atlantic Council, former National Security Council official, founder and chair of the global movement One Shared World, joining us on the phone from New York City. And again, drafting that fourth open letter when it comes to really getting into China and understanding a little bit more about the origin of COVID-19. All right, let's get back to world and national news. For that, we head to Nancy Lyons. She's in our D.C. bureau. Hey, Nance.
Hey
Hey there, Carol. The White House says President Biden and First Lady Jill Biden will be traveling to Surfside, Florida this Thursday to visit with families of the victims of the collapsed Miami area condo tower. Crews are still sifting through the remnants of the collapsed building, with families hoping for a miracle 6 days after that collapse. Biden has offered federal help and has extended his concerns to the community as people grieve their lost loved ones. The new director of the Federal Emergency Management Agency, Deanne Criswell, is asking the House Homeland Security Committee today for more money to help the agency prepare for another devastating hurricane and wildfire season. Bloomberg's Irv Chapman with details.
From hurricane-ravaged Gulf states to rain-soaked upstate New York and Michigan towns, members asked Criswell about uneven distribution of aid to low-income communities.
Our underserved communities across the country, when they get hit by a disaster, it's even more devastating for them. One of the problems is ensuring individuals that are eligible for assistance get all of the assistance that they're eligible for, and the fact that it takes them longer or they don't understand the process is not okay.
Committee members and Criswell pointed out that aid distribution decisions are often made by state governments. In Washington, Irv Chapman, Bloomberg Radio.
A wildfire in Northern California has grown to nearly 21 square miles and has begun to pose a threat to communities in Siskiyou County, about 250 miles north of San Francisco. The region is under excessive heat warnings, with afternoon high temperatures expected to range from 100 to 110 degrees. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser. Joining me once again is Doug Krisner, host of Bloomberg Daybreak Asia. Doug, a couple of stories about the labor market. And this one I think is interesting by Joe Weisenthal. Talks about this morning getting the labor differential sub-index of the Conference Board Consumer Confidence Survey. Apparently it's hit its highest level since the year of 2000.
Yeah, so what they're doing here is they're looking at those who think that jobs are hard to come by and measuring that against those who believe the opposite. And the spread between those two data points is, I guess, the highest that it's been since about 2000. Now, Yeshia from our MLive team was pointing out this only happens, when you look at this differential, it only happens under historical kind of context when you are arriving at the end of an economic cycle, because the robust labor market typically then would prompt the Fed to tighten, right? And then that's the end. So it's going to be very interesting to see whether or not these days that we have arrived at a similar point.
Yeah, it's interesting, too. The idea that the pandemic has caused more and more workers to reevaluate their lifestyle or workload in some ways continues to gain traction. It's not the type of thing that's just going to turn off like a switch when, say, we start to see, this expansion and or when the schools reopen. I have had a fair amount of conversations with people who either have thought about that. They're like, well, maybe it's time for me to retire. Maybe it's like they're really rethinking what's going in their life. And obviously, if they have the means to do it, that makes it a lot easier. The thing is, Doug, and you and I talked about this earlier, it's safe to say, and I think many point to it, it's not until we get into September, October, when the data points are clearer, people are able to go back to work, kids can go back to school, things start to normalize a little bit, that will really maybe understand what's going on in the labor market.
I think that's a good point, Carol. And when we talk about this Conference Board survey data, I think it's important to point out the quits data was from April, right? So it's lagging just a bit. It may be different in the current environment.
Could be even higher.
Yep, maybe.
Exactly. It's certainly one of the things we're tracking. We're going to get a read on the U.S. labor market. Of course, we'll get that on Friday with the monthly jobs report. Doug, thanks so much. You're listening to Bloomberg Business Week. I'm Carol Masser, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have less than 43 minutes until the closing bell. Let's get the latest on price action as we cross to the first word desk. Bill Maloney is there. Hey, Bill.
And good afternoon, Doug. U.S. stocks very quiet today with the Dow currently up 23 points. S&Ps are up a point, and NASDAQ rises by 22. The U.S. 10-year yield at 1.48%. Gold is down 16. Bitcoin is up 5%. And transports fall 20. Among the main 11 S&P sectors, only tech, consumer discretionary, and real estate were in the green. Utilities and telecom were under pressure. And leaders to the upside on the Dow, Nike and Home Depot, while Intel and Boeing led to the downside. In the corporate space, Salesforce is selling $8 billion in bonds in a 6-part deal. And in other news, Intel fell after reporting a delay in its server chip line, and FactSet EPS missed estimates. Wrapping things up, Virgin Galactic fell as much as 16% today, giving back some of last week's gains. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. And to get live audio market updates right on the Bloomberg terminal, function is SQUA, then the green go key. That is your Bloomberg Business Flash.
All right, really appreciate it, Doug. Thank you so much. Well, one of the hardest hit industries during the pandemic, no doubt about it, was the cruise industry, which is slowly getting clearances to get back ships out to sea. We talked about this on air yesterday about Royal Caribbean successfully launching its first revenue-generating sailing out of the United States this past weekend. Here with more in the industry and his company specifically is Richard Fain. He's chairman and CEO of Royal Caribbean Cruises. He is on the Celebrity Edge in Costa Maya, Mexico. That's where they are docked. And I'm a little jealous, Richard.
Well, you should be. It's wonderful here.
I am very, very...
Thank you for having me.
Well, it's a pleasure to have you. So tell me, share with us how things are going, how the launch went, and what kind of capacity are you seeing coming back?
This has been beyond our hopes. We set sail on Saturday. My first sense was when I came on board and the crew were just so excited to start seeing people. We've been talking to the guests who are just over the moon. This is important. It's just the first cruise, but it's a symbolic one because it shows that we're starting. We have the second cruise out of the United States just starting this Friday and another ship. So we're back and looks like we're heading to be back in a good shape.
It feels like steps towards normalcy. Having said that, most people will say there's no way going back. We are a changed world and society. So how do you do it safely for both your crew and your passengers? I've spent time on one of those massive cruise ships. There's a lot of people they're huge ships, but it's a lot of people in what is a relatively small contained space.
Well, 15 months ago, being in a contained space was a concern because remember, we didn't have vaccines, we didn't even have testing. If you think back, the CDC was advising against wearing face masks. We were really in a bad world. And over the last 15 months, we've had the opportunity of working with specialists, with experts, to really look at what would make it safer. And all the things that were concerned 15 months ago and made us voluntarily stop operating now work in our favor. So unlike going into a movie theater or a restaurant or a theme park, we know everybody who's coming on board. And we can take the time to make sure that they're vaccinated and tested, et cetera. So on this ship, on all of our ships, every crew member is vaccinated. All the adults have to be vaccinated on this ship. We have some children who aren't eligible for the vaccine, but the net result is that 99% of the on board is vaccinated. So that's the first line of defense. But the second one, as you pointed out before, people aren't as much worried about getting sick as they're worried about somebody else getting sick and ruining their vacation and them being quarantined or what have you. So we set up the procedures. We've set up procedures with the public health system, with hospitals, with everything else. So if we have a case, we can do contact tracing in a way you can't do on shore. You can isolate in a way you can't do on shore. And so a case doesn't become an outbreak. It just becomes a few people who are set aside, flown home, and everybody else carries on with their vacation. And you can't do that on land. On land, those people would just continue to infect other people, and you have no way to separate them out.
And that process is working, Richard? I mean, you've had some cases, is that correct? I thought I read something about some kids or something, but it's happened and the systems have kicked into place and everything's worked.
Exactly. By the way, remember, although this is our first cruise out of the United States, we've carried 150 or 175,000 people around the world during the period, and we've had cases because you can't eliminate it. You can't eliminate it on land, and you can't eliminate it at sea. But we've had a few cases, and just like the ones you mentioned, they were isolated, no muss, no fuss, didn't bother everybody else's vacation, and we flew them home. And that's really the objective, is keep the number very low and then take care of that low number.
From what I understand, you shared with our, I think, colleagues on the TV side that you expect most ships to be sailing by the end of the year. Are you, though, Richard, anticipating that the spread of the Delta variant will slow down your ability to reopen and reach all the ports that you were in pre-pandemic?
Well, I think we keep watching all of the things, including the variants and including the Delta variant, which today is the one that we're most focused on. But remember, a couple months ago, we were equally focused on the Alpha variant. But we are watching it, and we will continue to get the right guidance. It does appear, from everything we're seeing, that the vaccines that we have here in the United States are effective, including against the Delta variant. So the trick is to get more people vaccinated. And by having cruises where people are vaccinated and are freer to function, it also motivates people to get vaccinated. So I feel that's good too.
Richard, just got about 35 seconds left here. Carnival kind of rocked the industry on an investor front. They said they're going to be selling as much as $500 million in stock. Do you folks at Royal Caribbean, you have all the capital that you need at this point to get through the rest of the pandemic? And just got about 25 seconds.
I think we've expressed confidence in our financial position, and we've given no indication that we think that there's any need for any change.
Well, good luck. Enjoy Mexico and safe sailing. And it's good to hear things getting back more and more to a normal way, a post-pandemic way, and in a cautious way. Richard Fain, Chairman and CEO of Royal Caribbean Cruises, joining us on the phone from Costa Maya, Mexico, on the Celebrity Edge. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Masser in our Interactive Broker studio. My co-host Tim Stanovic is off on this Tuesday watching the markets, and we're awaiting the chart of the day. Dave Wilson getting ready to deliver that in just a moment. First up, though, let's get back to that trading day and your top business news. Here is Doug Krisner.
Hey, Carol, through the day we've been held in terms of equity trading in a very narrow range. The markets continue to grapple with the idea of the Delta variant negatively impacting in a severe way economic growth. You put that in the context of an S&P 500 with a current PE of 30 times, a forward PE of 22. The S&P right now is holding on to a record by less than a point at 4,291. The Dow is fractionally higher. Let's call it something less than 0.1%. NASDAQ Composite meantime better by about 0.2%. So the mood seems to be a little defensive, and volume a little on the light side as well. Information tech holding on to gains, but we do have weakness in some of the utilities. And many of the big banks are lower as well after unveiling plans to increase capital distribution. I'll give you a couple of examples. Bank of America right now down 1.6%, and Wells Fargo trading off about 2% right now. So we have the employment report due Friday. Today, data from the Conference Board indicated the spread between consumers who think jobs are plentiful and those who think they're hard to come by is now at the highest or the widest that we have seen since about 2000. Now, historically, that only happens at the end of an economic cycle. We have the long-term interest rates declining today, 10-year Treasury now yielding 1.47%. I'm Doug Krisner. That's your Bloomberg Business Flash.
It's a great sign, an indicator of the economy, that indicator. Doug, thank you so much. All right, you are listening to Bloomberg Business Week, and this is Bloomberg Radio. It's a little bit of Phil Collins. Is this Genesis, though?
No.
Or is it he's solo, right?
Yes.
Yeah.
And the song is called
Inside Out.
There you go.
So where are you taking us?
I'm taking you inside out when it comes to the stock market. How about that?
Okay.
You know, what we're looking at here is something called the S&P Completion Index, and it was highlighted by Strategas Research Partners in a Twitter post the other day. S&P has something called the Total Market Index, which is their broadest gauge of U.S. stocks. So what they do is they take out all the companies that are also in the S&P 500, and what's left is in this completion index. So you're getting an idea of how the broader market is doing. And the short answer is, lately, not bad. You go back to mid-May, you saw the ratio between the completion index and the S&P 500 set its low for the year, and since then, it's been up about 5%. So what you're seeing is sort of a renewal of the broader strength in stocks. And this chart was particularly well timed because others, you know, taking a look at the S&P 500 and the percentage of stocks above, say, their 50-day moving average. We actually had a chart about this on the Bloomberg yesterday. And there's concern because, you know, that number's falling. So this is kind of telling a different story than that technical indicator would. So, you know, that's why it's interesting. That's why it's the chart of the day. And that's why you can get it, if you haven't seen it already, by sending me an email. And on top of that, I'll give you everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, so help me out here. I thought the S&P 500 was a fairly broad-based index. So why does it become even better by taking the S&P 500 out?
Well, what you're doing is focusing in on the smaller and mid-sized companies. Not exclusively, because there are a number of larger companies. Think about Zoom Video, think about Square as examples that are not in the S&P 500. That said, you've got something like 3,400 stocks in this index. Okay. So, you know, it kind of gives you a broad look in the same sense that the Russell 2000 would, but it's even more comprehensive than that. So what you're getting is a sense of what's happening in the overall market. Beyond those stocks, we know that, you know, index funds are buying because they're in the S&P 500.
Well, and it's interesting, especially as everyone's trying to figure out, okay, where do we go from here, Dave, specifically, or talking about some parts of the market being overvalued. This gives you an idea that, well, wait, when you take the big picture, there's maybe some more room to run.
Well,
right?
That's the idea, is that, it's not just a few heavyweights leading the market. Think about, all those trillion-dollar companies by market value, the Apples and the Amazons, and now the Facebooks of the world, at least as of yesterday. So,
yeah.
It does tell you there's something more going on here.
Well, inside out. We turned it inside out. Good stuff as always. That chart of the day. Your stock of the day is coming up.
Well, indeed it is, and that would be Translate Bio. Now, this is, as you might expect, a company involved with biotechnology, but they have a relationship with the French drug maker Sanofi. And why that matters? Well, Sanofi came out today and said they're going to invest something like $480 million a year in messenger RNA technology. And if that sounds
where
familiar,
have I heard of that?
Yeah, exactly. It's what's used, by the COVID-19 vaccines from Pfizer and BioNTech, and also from Moderna. What's been interesting is that, Sanofi's been working on its own COVID-19 vaccines, and they haven't managed to get any out yet. So what they're looking at in this case is beyond COVID-19, other uses for this technology. So, Sanofi's going to try and speed up development of new products that tie into messenger RNA, and Translate Bio is going to be part of it. Oh, and by the way, Sanofi had a 6.5% stake a year ago. Presumably, they still have a lot of that, at least according to our data.
So that's stock of the day. You can find that at 4 or just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at the One Day. That messenger RNA space, 60 Minutes has done, and I know CBS has done some reporting. A lot of institutions and media organizations. They're talking about how it might create an incredible array of treatments when it comes to various ailments or cancer. That is a real push that we're seeing within the drug community.
Yeah, and clearly Sanofi wants to be part of this push. And
right.
I should point out, Translate Bio, the ticker on the stock, TBIO. So that's one to look for if you're so inclined.
TBIO. It's up 40% this year.
Yeah, and a lot of that is today, thanks to its relationship with the French drug maker.
All right, interesting stuff, as you said, up 13%. All right, Dave, thank you so much. Dave Wilson, our Bloomberg Stocks editor, here with his chart of the day. Be sure to check out his stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Just a reminder of where we are in terms of the market trade. We've just got just about 20 minutes left in today's trading session. We've been bouncing around a bit. We're off our highs and lows on the S&P 500 with a gain of just under 2 points, so call it unchanged on the day, 42.92. Dow Jones Industrial Average also just up a hair, up 26 points, so that's a gain of 0.08% at 34,310. And the NASDAQ, an outperformer on a percentage basis, but just barely. It is up 0.2%, up 29 points at 14,529. We have definitely seen a lot of movement and rotation in and out of the trade today. All right, back to world and national news and back to Nancy Lyons in our DC newsroom. Hi, Nance.
Hey, Carol. The slow work of sifting through the remnants of a collapsed Florida condo building is now in its 6th day, with families desperate for a miracle. Florida's Governor Ron DeSantis says rescue teams are working hard to bring closure for those waiting.
They understand that in every one of those condominium buildings were people whose our different families' world revolved around them.
DeSantis says first responders are breaking their backs trying to find anybody they can. The death toll still stands at 11, with 150 others missing. President Biden and First Lady Jill Biden will visit the community on Thursday. Well, President Biden is in rural Wisconsin today, pushing the need for an infrastructure package that would bring broadband to rural homes across the nation.
It isn't a luxury. It's now a necessity, like water and electricity. And this deal would provide for it for everyone, while bringing down the cost of internet service across the board.
Biden says he'll continue being out there making the case for the American people until the infrastructure deal is passed. Former Minneapolis police officer Derek Chauvin could be close to a plea deal in the federal civil rights case against him. WCCO cites sources who say Chauvin would have to explain what happened when he kept his knee on George Floyd's neck for several minutes, which ultimately led to his death. And the deal could mean he'd receive 25 years on the federal charges, which he would then be allowed to serve at the same time as he serves his 22.5-year state sentence for Floyd's death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to you, Carol.
All right, Nancy Lyons, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
This is breaking news from Bloomberg.
And we do have some breaking news. Headline crossing the Bloomberg terminal. Eric Adams leading in the New York City mayoral race. And this is, of course, the ranked choice tally. The City Board of Elections here in New York City releasing its first report of those ranked choice results today. Let's get more on this headline. Shelley Banjo is New York Bureau Chief here at Bloomberg News. She joins us on the phone in New York City. Shelley, that headline crossing Eric Adams at the top of that ranking.
Yeah, so what we were able to see is that Adams emerged as still the leading candidate in the process if you include ranked choice voting, compared to, with 51.1% of the vote compared to 48.9% for Garcia.
So, this process is an interesting one. It's a new one. The candidate, right, with the fewest votes gets knocked out. I mean, remind everyone how this process works.
Yeah, so basically, it's ranked choice voting. So your last choice votes get eliminated, and then they get reallocated to the rest of they get reallocated to to your second choice winner, and then the third choice winner, fourth choice winner, and fifth choice winner. And so eventually, all the votes get reallocated to the winner, whoever gets the most amount of votes. So right now, the situation is that they did the ranked choice simulation, figuring out, if absentee votes weren't included, who would be the winner. Eric Adams still becomes the winner, but they still have to count absentee votes. So that is something that we're not going to get, until next week.
So that will be the next kind of focal point for us. Do we care about kind of the rest of the ranking? We do, right?
We do care about the rest of it because what this is showing is that the race has narrowed, and so the absentee ballots will make a difference, and so this is still very much a live and active race, and so Eric Adams is likely to be the winner, but we still don't know, and we'll have to wait until next week.
It's interesting when you look at all of the candidates that were out there going into that primary ranking. What is it about maybe Eric Adams that you think resonated with voters? I know we talked with you. I know our whole media team was talking with you about the race in particular, especially coming out of the pandemic.
Yeah, the big issue that really resonated with people where Adams was able to rise up was all about crime, and so that's really the issue that he made the central issue and the one that continued.
And it is interesting in terms of what this city will ultimately need and what it's looking for. Does this, in your view, based on what you've been following, give us an indication of what will happen maybe ultimately, or does Eric Adams face some stiff competition in the next round?
It's just going to be a matter of how the absentee votes stacked up, so we'll find out more next week.
All right, we're going to leave it on that note. Shelley, thank you so much. Shelley Banjo, she is our New York Bureau Chief here at Bloomberg News, joining us on the phone in New York City. And just again, that headlines, Eric Adams being the top ranked in that primary ranking here in New York City, so taking that top spot. All right, let's get another check on our world of business. For that, let's head over to Doug Krisner. He is in our newsroom. Hey, Doug.
Hey, Carol. So we have about 15 minutes to go until the closing bell. The equity market has been in a very narrow range for most of the day. The Dow right now is up just about 0.1%. We have in the broader and secondary markets, the S&P and the NASDAQ extending record highs, not by much. Leadership really coming from the infotech space. Volume today has been light and trading a little bit on the choppy side. We've got a 10-year Treasury yielding 147, so very little movement in the bond market. In terms of eco data, U.S. home prices jumped the most in more than 30 years in the month of April. This is according to the S&P CoreLogic Case-Shiller Index of Property Values. It was up 14.6% from last year. And U.S. consumer confidence was up in the month of June. Data from the Conference Board also showing the spread between consumers who think jobs are plentiful and those who think they're hard to come by. That spread is now the widest since 2000. Historically, it only happens at the end of an economic cycle. Again, that 10-year Treasury yielding 147. In terms of equity price action, Moderna shares up more than 5%. The company saying its vaccine made protective antibodies against the Delta variant, and that's one of the things that markets have been grappling with in today's session. I'm Doug Krisner. That is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So just about 13 minutes left in today's trading session. We are headed towards the closing bell on this Tuesday. Let's get to it with Dave Gilreath. He is Managing Director and Chief Investment Officer at the money management firm for registered investment advisors. We're talking about innovative portfolios. He joins us on the phone from Indianapolis. Dave, nice to have you here. It's been an interesting day. We've seen a fair amount of market rotation throughout the day. We're off our highs and lows, little changes on those major market averages. Where are we? What's the market driver in your view right now?
Hi, Carol. Well, thank you very much for having me on. I appreciate it.
Sure.
Yeah, we're from Indianapolis, the financial mecca of the Midwest, right? But as far as the stock market goes, there is a rotation. In fact, Dave Wilson was just on earlier. It's talking about this broad index that Strategis has, inside out, I guess. It's doing well and showing that the whole market really is doing well. But it's not cheap, by any stretch. I mean, it's kind of hard to measure, I think, because we all know the numerator, the price, but we don't really know the denominator. So, and comparisons to, last year are kind of worthless because last year was such an anomaly. But right now we have a very low VIX, and it seems to me there's probably a lot of second quarter window dressing going on today and tomorrow. And, it's a kind of a dull market, and the old saying is never short a dull market, right? So, the forward returns, I think Tom this morning, Keene actually was talking about how the S&P 500 returned 10.5% for 30 years, which is very unusual. I mean, that's a really high number. And going forward, they might not be as high, but they don't really have to be as high to still have really good returns in equities. So,
are we trading on fundamentals? Are we trading on all of the cash that's out there and the Fed easing? Are we trading on an economic recovery after the market falling off because of the pandemic?
No, we're definitely trading on an economic recovery. People do have a lot of money in the banks and in their bank accounts, and they have very low debt. So the Fed's friendly, and it seems to me like things look pretty good for the stock market. We don't really, in our work at Innovative, we're not top-down kind of people looking at, the market in general or sectors or whatever. We've been managing money for a long time, like 20 years, but we just started Innovative about 3 years ago with a couple of mutual funds, one being our Dividend Performers Fund, we call it. And we basically decided, the Dividend Achievers Index is a great index of companies that have raised their dividends 10 years in a row, and there's 350 of those, and then we kind of winnow them down and screen them to look for the 50 with the lowest downside risk. And so we're not, the scoring system, we don't really pick the stocks kind of pick us, so we're not looking for trying to predict what the next great sector is or anything like that.
Yeah, if you look at your Dividend Performers Fund, it's KLA Corp, Caterpillar, ITT, 3M, Illinois Toolworks. It's a lot of kind of old economy to some extent companies, but as you said, these are companies that pay dividends.
Yeah, and they've paid them and raised them for more than a decade at least. So, and right now we only own 7 of the 11 sectors in the S&P, and the biggest weighting is industrials. It's like 40% is industrial. It's been that way for more than a couple of years.
Are you anticipating in terms of the industrial space too that with infrastructure legislation working its way through Congress that's going to be a boon also to some of those names?
Oh, absolutely.
Yeah.
I'm glad we're in that space. It's interesting because in 2019, 2020, everything was all about technology, right? And the FANG stocks, and if you didn't own the FANG stocks, you couldn't do anything. And but we were loaded with industrials then, but we still outperformed the S&P 500. So, and this year, thankfully, the industrials are leading the charge, and so we're having a good year so far this year as well. But the infrastructure bill will help. I mean, that's long-term money. I mean, that's the bill passes, but it takes a long time for that money to kind of flow into the system. So.
Yeah, I understand in terms of if you're waiting for it for tomorrow, don't hold your breath. Let's talk about some of the companies you like. Paychex is one of them, PAYX. It is up about 15% so far this year. This is a company that's working with smaller businesses, medium-sized businesses. It's all about payroll processing.
Right. They're a big payroll processing company, and hiring, should continue to go up. I mean, there's 9 million jobs, I guess, open in the U.S. right now. I guess the advantage, in my opinion, to them is that they deal almost exclusively with U.S. employers, and the U.S. is by far on the fastest recovery track. Much faster than the rest of the world, which is parts of the world are still a mess as far as COVID goes. So, and they pay a solid dividend, over 2.5%. They've raised it 10 years straight, and they hit a new high today.
Yeah, they did.
At about 108. So I think they're in a good space.
All right. Another name that you like is Rockwell Automation, and this plays into the industrial space and manufacturing, which we are starting to see come back, and especially as facilities ramp up to meet increased demand.
Right. Yeah, and they are a global leader in industrial automation. I mean, their tagline is to make factories work smarter and more efficiently, and that's exactly what they do. I mean, people have been talking about a tight labor market here. I'm not sure that the market is as tight or if it's really just sort of a labor dislocation. But, there is a need for skilled labor, and it's forcing all of these employers to improve their productivity, which is right in Rockwell's wheelhouse. So they've also raised their dividend for over 10 years. They hit a new high last week. They're now, I don't know, a few bucks off their high, but still, they've had a really good year so far.
Yeah, exactly. 283.75. That 52-week high, or that recent high, was 289 and change. So just about $6 or so, or $5.50 off of that. Stryker. And this certainly plays into healthcare. I mean, these are the company that does so many different implants, orthopedic implants.
Right. So hips and knees and all that good stuff, and COVID, slowed all of those joint replacements down, and all the quote unquote elective surgeries. Which to me, if you can't walk, that's I don't know if that's elective, but the baby boomers are aging, and I mean I'm a baby boomer, and demographics are certainly on the side of Stryker, and really because of this pandemic shutdown, there's a lot of pent up demand for new knees and hips and things like that.
It's I'm going back to something you said earlier about with Dave Wilson when he was talking about the broad-based rally, and as you pointed out, you're not in every one of the S&P sectors. I want to go back to you are a below index weighting in technology. Is that because you don't believe that makes sense longer term, or is it just it's gotten a little expensive?
Well, it's just the fact that the screening tools that we use didn't lead us into technology stocks, and it's probably because they were relatively expensive compared to other, equities in that space. We have a handful, like KLA is one of our bigger positions, and we've had that, since the beginning. But we're not trying to pick sectors. We're just picking the stocks that fall through the screens. So, and we only rebalance 2 times a year, so we're not. We kind of buy and hold things for quite a while.
Right, you're not moving around. What about in terms of exposure to consumers at this point? How do you see it? Is there a play there for you?
One of our bigger positions also is Target, and we like Target quite a lot. We've owned it a long time. It's our best performer. We're up like 160 or 70% on that since we bought it. And it absolutely, that's our second biggest weighting is in the consumer type stock. So, the consumer obviously is in great shape, and they're itching to get out and spend money, and they are spending money and will be. I mean, you had the chairman of Royal Caribbean on just a few minutes ago.
Right,
and he's,
right.
he's sailing away and got a ship full of people with him. So,
Are you being defensive at all in your positioning?
no, I would not say we are defensive at all.
Doesn't feel like that way. It really does feel like the reopening and getting back to more normal. But I do wonder, are you concerned at all? We talk about the Delta variant. We're seeing it certainly create some havoc overseas. Are you at all concerned that that could ultimately at some point have some impact on the U.S. market, once again, the U.S. economy?
I mean, I've been in this business a long time. The Dow was below 1,000 when I started, and we've had horrible news every day that I've woken up, And yes, I mean, it could be a concern, but people they've shown now that if you've had the Moderna or the Pfizer vaccine, that it seems like you have, protection for a long, long time, maybe lifetime is what the article said today. But so I think as more vaccinations happen around the world, it's going to be less and less of a problem.
Hey, before we go, just got about 30, 40 seconds here. There was something in your notes that really caught my attention. It's something I've been thinking a lot about, the lack of babies being born in the two biggest economies, the U.S. and China. It's not a problem for tomorrow, maybe not in a year or so, but down the road, that's going to be something that's going to be rather impactful. Just quickly.
Oh, it'll be very impactful. The two biggest economies, we're not having enough babies, and the U.S. doesn't have as big of a problem because we have a lot of immigration, but China does not have immigration, and I mean, at least historically they haven't. So, an economy can only grow as fast as the population and the productivity goes, and so if you don't have population, you got to really increase your productivity.
All right, we're going to leave it on that note. What a great conversation. We covered a lot of ground. Thank you so much. Dave Gilreath, he's Managing Director, Chief Investment Officer at the money management firm Innovative Portfolios, joining us on the phone from Indianapolis. We say that with the S&P just up 2 points, call it unchanged. Dow up almost 23 points there, also pretty much unchanged on the day. Same thing for the NASDAQ, just a gain of about 28 points. All right, folks, we're getting ready for Beyond the Bell with our Bloomberg TV team. We're going to do the simulcast and count you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, counting you down to that closing bell, here to help take us beyond the bell. Carol Master joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse the most crucial moments of the trading day, Carol. But the most important thing right now is it's hot here in New York.
I was just going to say, ho-hum a little bit, because it's been such a tight range today. We've been all over the place. It feels like at one point, all of the major groups in the S&P 500 were higher. Then we kind of turned around, and then they were lower for the day. But if you look at the S&P 500, Caroline, I mean, the range from high to low was about 0.3%.
Meanwhile, range bound, Russell 2000 less range bound, off by 0.6%. But volume's low. Maybe this heat, Taylor, is getting, not only your cat is melting.
I see a beam. I see a beam,
Caroline. But the whole world is melting. And so we see people just not having much action in terms of buying.
Feels like 103. We're all sweating. Thank God for air conditioning. But really highlighting, Romaine, perhaps the summer doldrums of the low volatility, low volume day, and some of the concerns that it gives the underlying moments when you get some of these record highs. And well, does it come on strength? We did have a great chart earlier showing the number of members within the S&P 500 that were above that 100-day moving average. Well, it's fallen. It's just 75% now.
Yeah, just looking it up right now. 92 degrees here in Central Park for all the folks, of course, keeping track of their. Yeah, and for all of our European friends, Sweden, Ukraine tied at halftime there, 1-1. All right, let's get you back here to what's going on in the U.S. market, getting the closing bells here. The Dow Jones Industrial Average right now clinging to a fractional gain on the day, up 3 points. Again, it takes a while for these things to settle down, so you could pretty much call it unchanged on the day, whether it's red or green. That'll be determined over the next couple of minutes. Similar story for the S&P 500, up 1 point. NASDAQ Composite up 28 points. That's good for about 0.2%. And as far as the Russell 2000, well, that's your big laggard on the day. No matter how things settle, it's going to settle down about 0.6% right now, Carol.
Yeah, and I know we're going to get into the groups and the performances, but I was a little disappointed by the financial sector. I thought, with news about raising some dividends, news about some payouts, that you would start to see that sector surge today. But except for a couple of outliers, it was kind of not that interesting, Taylor.
Let's start there, Carol, because it really saw that rotation, perhaps a broader rotation out of value into growth. So you see the banks, as Carol was mentioning, we're down on the bottom for the radio audience, where we're taking a look at the sectors for the winners and the losers. Banks are off 1%, the second worst performer. Utilities also off about 1.7%. Some of those bond proxies, but out of value into growth, and we migrate northward, and it is tech, it is semiconductors, and it is software. Those are up anywhere from 0.6% to maybe 1.5%. So, Carol, from a sector level, you really see that rotation underway.
Exactly. One name, though, that definitely caught investors' attention, and that really plays into something we're going to talk about later on, the Delta variant. But Moderna getting a big boost, up 5.2% in today's trade, 234.46 at the close, shown to be good against protecting those folks who get the Moderna vaccine against that Delta variant. So that was really key. We talked about the banks. Taylor just talked about it as a sector overall. Morgan Stanley, one of the outperformers, though, big dividend boost and buybacks post those Fed stress tests. They're increasing their quarterly payout to 70 cents a share, doubled that, and announcing as much as a $12 billion buyback plan. We got that after the close yesterday. Want to mention Advanced Micro Devices really outperforming the overall semi industry, winning unconditional UK merger approval to buy Xilinx. And analysts also weighing in, saying they see signs of improved market share for their supercomputer products. So AMD was up about 2.8%. One more name, Qorvo Semiconductor, serves the communications markets. Yeah. Price target raised to $220 a share from $210 by Barclays. They have had quite a run, Romaine. Yeah. They're up 7 days in a row, up about 14%.
All right. Well, Tim Stenovic, I believe he's succumbed to the heat. He's got the vapor, so I'll do the decliners for you. Intel taking a leg down. Interesting note out by Wells Fargo saying there could be an implied delay in the timing of that company's Sapphire Rapid Xeon chip that a lot of people were looking for. Carvana also getting a downgrade today to neutral over at Piper. And then look at this. Facebook actually dialing back some of the gains that it made yesterday. I guess some people still concerned. And, of course, you talk about the Delta variant and the effect that that's having on the travel space. Booking, TripAdvisor, Expedia, all the travel stocks lower here for a second straight day.
The speed remain, the speed with which, of course, you pivot from the decliners to, well, that heat that you kicked off this whole discussion about, and we see that reflected in commodity prices. For our Bloomberg Radio, I'm looking at nat gas, up 2%, 6 straight days of gains in terms of your futures on nat gas. The reason we're all cranking up that air conditioning, particularly on the northwest, here on the northeast as well, that means, of course, that we are seeing, well, the longest winning streak for natural gas prices since August 2018. We see it basically green across your screens when you look at commodities at the moment. Zinc up a percentage point. Brent crude inking out a gain up 0.6%. Remember, all-important OPEC Plus meeting in terms of what they do in terms of the supply side this week. I'm looking also what that means for the foreign currencies, because actually, interestingly, as commodities went higher, commodity-related currency pairs actually went lower. Aussie dollar off by 0.7%, Canadian dollar off by 0.4%. This is a story of US dollar strength. We were searching for some sort of haven, the COVID variants, Taylor. That's a key concern. Some of that being reflected in what's happening in the bond market too.
100%. Unfortunately, we get Unch on the day, Caroline,
you love
today,
Unch.
as we are still under a 150, about a 148 or so, 147. And a 209 on the 30-year. But this idea of how low rates relatively have been really brings up, well, low rates mean higher home prices. And Carol, this is some of the economic data that we got this morning. That Case-Shiller index is growing on a monthly basis year over year at the fastest pace since 2005. And I had read a great article this morning in the Wall Street Journal where it really highlighted what Fed officials were looking at tapering mortgage-backed securities, what Fed officials, Carol, were thinking of maybe just doing an equal weight or a Treasury taper, and how much of this discussion is starting to center around some of these home prices and maybe a little bit of that inflated mortgage market that we continue to see.
Well, it's interesting to hear them talk about that. What I want to hear them talk about is, are they concerned about the Delta variant? And I've had a lot of market guests come on, I don't know if you guys have as well, that Should we be a little bit more cautious about ultimately what we're seeing overseas in Asia, Australia, some other markets? Should we be concerned at some point that we're going to have some problems here in the United States? Will that impact the economy? Could we see another shutdown?
Yeah.
Will that impact the financial markets? We know there's a great story on the Bloomberg that talks about vaccinations right across the U.S. We know that in some areas, southern parts of the country, there's not a lot of vaccinations, and we're going to see some regional breakouts.
Yeah, it'll be interesting to see how this affects. I mean, we heard from Amesh Adalja over at Johns Hopkins, who spoke a little bit earlier on Bloomberg. He kind of said, look, this is going to be the dominant variant. There's no stopping that. That's just sort of the biological evolution of this stuff. I believe we have a clip of what he had to say. Take a listen.
A lot of the talk about the Delta variant, I think, comes back to what we're trying to do in this pandemic. It's not to get to COVID zero. It's not to prevent all mild illnesses. It's to prevent serious illness, hospitalization, and death. And our vaccines do that very well, even with troublesome variants like Delta or with the Beta variant. So that's the message. Get vaccinated.
All right, and really, I mean, and we should just point out real quickly here, Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Of course, we were listening to Amesh Adalja there for all of our listeners there out there on Bloomberg Radio. But Caroline, I mean, when we talk about, I guess, the need, the idea, I guess, that we're not completely out of the woods, that there is still a risk out there, but the market so far, at least here in the U.S., is kind of shrugging it off.
Yeah, I mean, even when you see Europe get a little bit worried about it, it's only off by about 0.2% on the days that you do see that. It's the travel stocks that get hit the hardest, of course. The concerns about whether we'll be back on cruises, as we were talking to Royal Caribbean yesterday. For every 2 steps forwards in terms of the, you know, the hopes, the economy reopening, we take a step back, and it, of course, does prove a little bit of volatility. It does question mark why we get this haven bid. That's why you see money moving into the dollar, why you see, once again, perhaps some of those reopening trades, Taylor, not doing so well, why energy financials fall on the day, and why it's once again big tech as your outperformer.
And cryptocurrency.
Yeah, you guys are kind of a downer here. Can we talk about something more upbeat?
36,000.
What's happening?
Brady, let's talk about Brady. Let's talk about
laser eyes is the sell signal.
What I love about this is Giselle and Mr. Bunstein are basically buying into, what is it called, Caroline?
FTX.
FTX. And this is a big deal here. There you see Tom Brady slumming it there on the football field. His wife, of course, the breadwinner in the family. You know, she has been, you know, they've been out front in this, at least on social media, about their love of crypto. Yeah, well, you know.
They love crypto. They love ESG as well. She's coming on board to FTX, that crypto exchange, apparently as the ESG guider, basically, that's going to be on board. But this is a company that's kind of been ahead of the curve.
This guy, I think it's interesting. He's wearing a Tampa Bay jersey, but he was a big deal up there in Boston for a while. I mean, kind of the pride, I believe, of New England.
What else is a big deal
and
with
what
Boston,
better segue
Romaine?
than to mention that coming up this July 4th, which is Sunday, Bloomberg's annual broadcast of the Boston Pops July 4th Spectacular. You have to watch this, let me tell you. It's going to be Alex Steele hosting this, along with myself and a couple other people. I mean, just worry about me and Alex Steele. Mavis Staples is going to be there, John Baptiste, the Boston Symphony Orchestra. This is a huge deal.
What are you going to be wearing,
It's fun.
Hey,
It's going to be
Romaine, I hate
this
to
year.
tell you, but the Boston Pops are the real star of the event.
I've been told
Just
that.
going to tell you.
Yeah, they haven't met me.
They're very
For a
beloved, as they
surprise.
should be. All right, that's going to be a lot of fun for you guys and for everybody here at Bloomberg. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and YouTube. We'll see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so the market's closing on this Tuesday does feel like it was in a pretty incredible tight range, certainly when it comes to the market averages. We are, to some extent, it feels like, ticking down to that monthly jobs report on Friday in what is going to be a holiday week, of course, ahead of that 4th of July. And my mic is making some noises here, so funny how technology plays with you. We did, though, finish just off our lows of the session, but the S&P just with a gain of 1 point, the Dow up 9 points, and the NASDAQ settling in with a gain of just under 28 points. Let's get to world and national news. For that, over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says his bipartisan infrastructure agreement is a step forward for working families across America. He says the federal government needs to take the lead.
America has always been propelled into the future by landmark national investments. Investments that only the government has the capacity to make.
Biden made his pitch today in rural Wisconsin, hoping the promise of broadband expansion and better roads and bridges would resonate with farmers and others in the region. The gap between the most vaccinated and least vaccinated places in the U.S. has exploded in the last 3 months.
On a national level, the news looks good. About 300,000 new people get a COVID vaccine every day. 54% of the full U.S. population has had at least one dose. But in the south and central U.S., where the least vaccinated counties are, less than half the population has gotten even one dose of the vaccine. This troubles healthcare officials. They say gaps in vaccination rates could lead to another epidemic and will allow for new mutations, giving the virus a chance to evade vaccines. In Washington, I'm Amy Morris, Bloomberg Radio.
Well, there's some promising news on the vaccine front. Moderna says its vaccine produced protective antibodies against the contagious Delta variant, which is fast becoming the dominant strain. In the ranked choice election for New York City Mayor, Eric Adams has maintained his lead in the tally with 51.1% of the votes. That's according to the Board of Elections. Catherine Garcia now in second place with 48.9%. Maya Wiley, who was in second, has now been eliminated. Absentee ballots will still need to be counted before the final results are known. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Joining me once again is our own Doug Krisner, host of Bloomberg Daybreak Asia. And Nancy mentioned this, New York City's Democratic mayoral primary tightening dramatically today, with Brooklyn Borough President Eric Adams holding a 2-point lead over former Sanitation Commissioner Catherine Garcia, with around 125,000 absentee ballots still to be counted. Doug, you were there on that night as this was going on. This was the first time we were going to see and get some revelation from the rankings. How do you see it?
Well, last week on the 22nd, Adams led with about 31%. So now that we've had 12 rounds of this ranked choice voting, he is on top with 51.1% of the votes. I think what's interesting here is that Maya Wiley has been eliminated. She was the progressive. She had quite a bit of support from outside of New York City. I'm thinking of Elizabeth Warren, although within the city, AOC was also or had endorsed Wiley. She has fallen away now. So at Catherine Garcia, I think this is the news here, up to 48.9% of the vote. That is a big move. She was last at 19.5. Now, bear in mind, Carol, we have about 124 absentee ballots that won't be counted until next week. That will be the determinant.
Yeah, that's awfully close, right? And maybe a surprise, and just reminds you that this race is far from over.
You're right about that. And I think it's safe to say that it also is maybe an indication as to where the Democratic Party is right now ideologically. And if you let this expand beyond just New York City, what does it say when in one recent survey, 31% of the respondents put crime as the top issue? Now, Eric Adams is a former New York City police captain. He campaigned as a law and order candidate. So if it's Adams or Garcia, you're looking at two centrists. The progressive has been eliminated.
Right, exactly. And you speak of Adams, he also opposed calls to cut police budget funding, advocated the return of some form of stop and frisk, as well as a plainclothes anti-crime task force. But you're right, everyone is looking at what the city is, where it is post-pandemic. All right, Doug Krisner, thank you so much, host of Bloomberg Daybreak Asia. That's coming your way in just a couple of hours.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Somewhat interesting in markets today. We had investors grappling with how the Delta variant might impact economic growth. And of course, we have the U.S. employment report that is due Friday. Today, long-term interest rates actually moved lower. 10-year Treasury last quoted at 147. But the equity market was actually able to move higher and extend some records. That, at least in the case of the S&P and the NASDAQ. The S&P today up 0.1%, NASDAQ comp rising 0.2%. Where the Dow was concerned, a gain of just 0.1%. Leadership coming from information technology. Moderna shares among biotech firms advancing. The company saying that its vaccine made protective antibodies against the Delta variant. Today, Moderna shares up more than 5% to a record high. Not surprising, you're going to see many of the airlines, hotels, cruise line stocks down today. We had the S&P Airlines Group down about 0.7%. Now, in terms of economic news, data from the Conference Board indicates the spread between consumers who think jobs are plentiful and those who think they are hard to come by, that is now the widest since 2002. Historically, our MLive blog team points out, this only happens at the end of an economic cycle as we prepare for quarterly earnings. That will begin soon. Again, that 10-year Treasury, 147. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So we talked about this a little bit in our cross-platform coverage of the closing bell today. We were talking about Giselle and Tom, and it is one of our most read story. This is about the two of them, Tom Brady and Giselle Bundchen, taking an equity stake in the crypto firm FTX. So let's talk a little bit more about it with our reporter who put it out there. Bloomberg News cross-asset reporter Vildana Hyrick. She's here in our Bloomberg Interactive Brokers studio. So let's go through it again. We did talk about it a little bit earlier, but the two of them, how big? Is this just a normal investment by a couple of celebrities?
Well, everybody's interested in what Tom and Giselle are doing, but basically this celebrity super duo, they've taken an equity stake in FTX, which is this really rapidly growing crypto exchange.
Right.
It caught a lot of people's eyes because they'll both be ambassadors for the company, and it's a little bit unclear exactly what that means for Tom, besides potentially representing the company in public. But Giselle, she's kind of known for a lot of her charitable giving, her charitable work, and she'll actually be representing the company with some of their charitable giving, and they'll both be receiving an unspecified amount of cryptocurrency as part of this deal.
Mm-hmm.
We don't know which types of cryptocurrencies, but again, it's something that's really exciting to the crypto community.
What do we know about the firm FTX? You're right, it's one of the world's largest crypto exchanges. It launched, just a couple of years ago?
It did, yeah, and it's run by a 29-year-old CEO, Sam Bankman-Fried. He's been really out there. They've been growing very rapidly. They do billions in volume on a monthly basis, so they've been expanding a lot of their actually sports partnerships. They inked a deal with the MLB recently, and they also put their name on the Miami Heat's arena in Miami. So it's really interesting the type of audience that they're looking to attract.
And Tom Brady, he's kind of been out there in his support of crypto, right?
He has. So as part of a conversation with the CEO of FTX earlier this year, as part of a crypto conference, he actually told everybody that he and his teammates and his coaches talk about cryptocurrencies in the locker room, that they talk about prices on a daily basis, he said, and they're really excited about what's going on, and they sort of trade tips and tricks. He did admit that it's highly volatile, but that he was really excited about it. And then he changed his Twitter picture.
I remember when he did that.
In May.
I remember when it came across my feed.
Yeah, and a lot of people were excited about that because
he changed it to what?
To laser eyes. He added laser eyes to his profile picture, which
Elon Musk has done this too, right?
Lots of people have done this. There's some senators who have done this. It sort of just denotes that you are a crypto supporter. But then earlier today, he tweeted again and said it was a video, a montage. Obviously wasn't real, but it was sort of like a fictitious Bitcoin that he threw towards the moon to denote that Bitcoin is
going to the
moon, and it sort of bounced back and came flying back. But it was him throwing it, his signature throw. So I thought it was really clever.
Where does FTX, this crypto exchange firm, fit within the kind of crypto universe that we are increasingly talking about?
Well, there's a lot of exchanges. There's a lot of products.
That's why I'm curious, yeah.
Yeah, but they are really rapidly growing. And the CEO has been out and about. He's been doing tons of media interviews and, again, inking these partnerships where they're trying to broaden their customer base.
Vildana, you and I were talking before we got going about Cathie Wood filing for a crypto ETF. She is so well known for being out there when it comes to disruption, innovation. She has certainly been very vocal and supportive of the crypto space. There are several that have been out there, right? Filings for crypto ETFs, just kind of waiting for regulators to sign off on this. What's the timeline? Do we have any idea about how this might move forward?
Well, there's actually more than 10, according to a tally that is being kept by Bloomberg Intelligence and by our data teams. It's really unclear because when Gary Gensler joined the SEC, a lot of crypto fans were really excited because he taught these courses on cryptocurrencies and blockchain at MIT, and so they thought that maybe this that maybe he would be more receptive towards cryptocurrencies ETF. He's made some comments to the contrary recently. There's just still a lot of volatility. We had this huge sell-off last month where Bitcoin lost like 30% in one day. We'll see. It's really, really unclear. People were excited about Cathie just because she is such a well-known name and people love to hear what she has to say. One of her funds does already invest in another cryptocurrency fund, the Grayscale Bitcoin Trust. And so the idea was that potentially if an ETF is approved, that within her funds, she could swap out those Grayscale shares for shares of her own Bitcoin ETF. So there's a lot of, people are analyzing this. They're parsing through this.
If and when ETFs are certainly signed off by regulators, I mean, that would certainly give, the average Joe and Jane, right, access to ETFs on a much bigger scale. What do you think that would do potentially to the markets, or what do you hear from market watchers the impact it might have on the trade? Just got about 30 seconds.
A lot of people would be really excited about this because for crypto fans, it signifies that regulators are accepting of cryptocurrencies. There is a race to get it done first because typically the first to get it done attracts the most assets. So we'll see what happens.
What it'll do for demand, though, right, in raising prices potentially?
I mean, I think a lot of people will be terribly excited about this.
All right, well, something we're going to keep watching and waiting for. Meanwhile, Tom and Giselle taking a stake in a crypto firm. We'll watch what they will be doing. Vildana, thank you. Vildana Heinrich, she's cross-asset reporter here at Bloomberg News in our Interactive Brokers studio. You are listening to Bloomberg Business Week. Coming up, our own David Weston sitting down to talk with New Jersey Governor Phil Murphy. We'll get to that in just a moment, right here on Bloomberg Radio. All right, Doug. Ed Kalegi, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. We are awaiting David Weston getting ready to sit down with New Jersey Governor Phil Murphy. In the meantime, just a reminder of how we finished on this Tuesday. It was kind of an interesting day because we did have a fair amount of bouncing around in terms of the market trades, certainly on the equity side of things, but a tight range, lower volume. S&P 500 ultimately just finishing up 1 point at 42.91. Dow Jones Industrial Average, a gain of 9 points, closing at 34,292. NASDAQ, the outperformer on a percentage basis, but just by a hair, up 0.2%, up 27 points at 14,528. But it's interesting because for all the talk about inflated equity prices, we saw a peak in earnings growth and the spread of a highly infectious coronavirus strain. Stocks managed to close ultimately at another record. We've seen the S&P 500 rallying more than 90% from those March 2020 lows. But again, everybody's watching some of those virus headlines and vaccine headlines for any kind of concerns, especially when it comes to the Delta variant, that we could see a potentially or a possible lockdown once again. And I'm guessing that might be part of David Weston's conversation when he sits down with the New Jersey Governor Phil Murphy. We do want to head on over to David Weston, of course, host of Balance of Power on Bloomberg Radio and TV, getting ready to sit and talk with New Jersey Governor Murphy. They've got a new budget out.
Delighted to be joined once again by Phil Murphy, the governor of New Jersey. Welcome, Governor. Great to have you with us. We have to start with that budget, $46.4 billion. It looks like there's something for almost everybody in there, including a fair amount for your pension plan. What are the highlights for you?
Yeah, David, good to be back with you. Clearly this is a budget that continues our investment in that stronger, fairer, and now more resilient New Jersey. So all-time high investments in public education, infrastructure, public health, lots of money directed at shrinking the inequities that this pandemic has laid bare. And I would say at the same time, doing it in a fiscally responsible way. When we came into office, we inherited a whole range of large, unaddressed structural deficits. We have chopped away at that in our 3.5 years in office, and this budget today is an all-time high in that respect. The first full pension payment in 25 years, debt defeasance, debt avoidance totaling $3.7 billion, a surplus in the budget of $2.3+ billion. Those are numbers and those are steps that New Jersey's not taken in a long, long time.
And Governor, I dare say that a year ago, 18 months ago, we would have said this was almost impossible. We thought the pandemic was really going to lay low a state like New Jersey that was hit so badly by the pandemic. How did you do it? How did you manage to accomplish all that?
Well, listen, I mean, it's a reality shared by 9.3 million of us. It's no one move, David. I think, first of all, we made it clear from the get-go that public health would create economic health, and it was not the other way around. And as painful as that was, particularly last spring and into the summer, that was clearly the right order of events. And by the way, even having said that, we've lost, as you and I have discussed, we've lost over 26,000 of our fellow residents. So we paid an enormous price. But driving the pandemic, the virus toward the ground and to where we are today, I'd say is the most important element of that. And then if you look at people's activity, they may have been working from home. They may not have been going to the store, but they were still working in many cases and still consuming. Listen, again, we paid a big price there as well. A lot of people unemployed, small businesses that went under. But for the most part, we were able to muddle through. We borrowed money at the nadir, and that allowed us to keep our programs in place, keep people employed at the state level. And so it's a combination, I think, of a lot of different elements.
And I think it's important for the audience, as I understand it, this is without regard to the $6.25 billion that you're getting in federal pandemic relief. That's put to the side, yet to be spent. So in retrospect, do you think you needed that money?
I do, David, because we have some long-term investments that are going to be required here without question. Everything from learning loss to mental health programs, to bolstering our small business community, particularly restaurants and bars and other small businesses that have been crushed, investing in our school buildings, particularly in older ones, and we got a lot of them with their HVAC systems, investments in public health. We've paid a huge price as a nation, and New Jersey's no exception, for underinvesting in public health for too long. So there's going to be a lot of monies toward bolstering that public health, bolstering our transit and infrastructure realities that have been clobbered by this pandemic, et cetera. So the answer is yes, we will put it to good use. It'll be spent as is required over a 3-year period, the American Rescue Plan money, and we'll do it responsibly. And that's an important driving element of everything we do here.
Governor, at least in your mind, do you have some money set aside for that Hudson Tunnel? Because we've heard from Senator Schumer that he might like to move that up to 2022. Are you prepared to pony up what New Jersey has to get that done?
We sure are, David. I mean, this is a big deal. The 2 rail tunnels under the Hudson River were built in 1910. In fact, finished in 1910. So this program, and I was with Pete Buttigieg over the weekend talking to him about this. He was in looking at the tunnels himself yesterday. This is to build 2 new tunnels and then to rehab the old 2. This is the Northeast Corridor lifeblood. New Jersey is ready to go. We're already working on one project on our side of the river, and we want to get things going. Senator Schumer and I were back and forth over the weekend as well. This is a game changer. It's way overdue, and it'll have huge implications positively for New Jersey, but as I mentioned, the entire Northeast Corridor.
Governor, you mentioned the 26,000 people you lost in New Jersey because of this pandemic. Let's go back to that battle that you've been fighting for some time against the pandemic. Looks like you're doing pretty well in New Jersey. At the same time, we now have a Delta variant that's coming out that's got a lot of people concerned. How concerned are you? And more specifically, I saw that Hong Kong shut down their airport to people coming in from the United Kingdom. You've spent time over there in Asia. Do you think that makes sense, for example, for Newark?
Yeah, it does not at the moment, but it certainly did, and we worked with the federal government, in that case the Trump administration, to restrict in and out, and now the Biden administration, as you know, as it relates to travel to India, which was really painful for New Jersey because we've got one of the largest South Asian populations of any American state. Listen, the variants are in our state. We're the densest state in America. That's part of the reason why we got clobbered last year and why the variants are all over the state this year. But, and this is an important and positive but, the vaccines work. They clearly work, particularly both, if it's a 2-shot vaccine, you got to get them both, folks, but they work against, including these variants, including the Delta variant. That doesn't mean you can't necessarily get COVID, but it does mean you'll stay out of the hospital and thank God you won't die. And so this is increasingly, David, in our state, a pandemic among the unvaccinated. Right. And I would just plead with anybody watching, whether you're in Jersey or not, right, the personal health risk to you by not getting vaccinated far outweighs any risk associated with getting vaccinated. And that's the best thing we can do, period, but also against these variants.
And finally, Governor, to pick up on that, the vaccines work if you get vaccinated. Last time we spoke, there is some differentiation within New Jersey about which communities do get vaccinated, which don't. Unfortunately, it tends, not 100%, but tends to correlate with people of color. Is that still the case in New Jersey, and what are you doing to overcome that?
Yeah, David, we've made a lot of progress, but we're still at it. You know, we had set an objective of 70% of our adults to be vaccinated by the end of June. We did it. We've exceeded that. I'm incredibly proud of our vaccination program. I think it's one of the strongest in America, and it's due to a lot of different folks doing a great job. But, and this is the big but, the equity piece is not yet where it needs to be, particularly, as you rightfully point out, in Black and brown communities. It's why, as we speak, we have a community corps literally going door to door, knocking on doors in 22 communities up and down the state. And those communities are overwhelmingly communities of color, and we'll stay at it until we get the equity issues fully addressed.
President Biden said July 4 is the day we all get to come back out again. What's it going to look like in New Jersey? What kind of restrictions are there going to be on those fireworks, for example, over the beach?
Yeah, there won't be many restrictions left, David. I mean, we've lifted most of them as of the Friday before Memorial Day. So I'm looking forward to a great 4th of July on the shore, at our lakes, on our main streets, and a great summer. You still need to wear a mask if you're on a bus, a train, or a plane, or you're in a hospital or a long-term care setting. But beyond that, we're pretty much wide open for business. God knows we need that, and I'm looking forward to a great Jersey Shore and Jersey summer period.
Might there be a little campaigning in there for you, Governor? I think there's an election coming up in November. You have an opponent now. How do you assess that race?
Yeah, listen, there will be some campaigning for sure. Listen, we have our heads down and we run like we have since day one. And when we ran the last time, like we're 10 points behind. And that's exactly how we'll continue to be. Focused first and foremost on governing this great state and saving as many lives, please God, as we can, getting people back to work, getting our small businesses back up on their feet. And then at the edges, we'll do some campaigning. And as I say, we're going to run like we're 10 points behind every step of the way.
It doesn't happen all the time, but there have been Republicans actually who've been governor of New Jersey. And as I recall, the last time it was because of property taxes. Do you have any vulnerability on the tax issue?
Listen, David, a Democratic governor in Jersey hasn't been reelected in 44 years. Wow. So for all the blueness around our state, that's a fact. Yeah, we've had 3 of the lowest property tax increases year on year of any year in our state's history. The budget I signed today has a ton directed at that. Homestead rebates, senior freeze. We're doing a lot of tax reliefs. Right. Folks are going to start getting in the middle class, getting checks in the mail at the end of this week. So we get a lot going at that. It's not solved yet, but we're making progress.
Governor Phil Murphy of New Jersey, thank you so much for being with us today.
All right, you have been listening to the host of Balance of Power, David Weston, on Bloomberg Radio and Bloomberg TV, talking with New Jersey Governor Phil Murphy on a day where he signed a record $46.4 billion budget and sending out checks of up to $500 to 760,000 families. So again, but also talking about reopening the state, talking about vaccines in the state, and just covering some of the major issues, and also talking about the next round of campaigning. You are listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Let's get another check on some of your top business stories and some of that news after the closing bell. Those closing numbers on Wall Street. Here is Doug Krisner.
Hey, Carol. So markets advanced today. Trading was a little skittish. Nonetheless, we did have both the NASDAQ Composite and the S&P 500 finishing at record highs. Information tech out in front. Through the day, a key question is on how the Delta variant might impact economic growth. You put that in the context of a pretty expensive market with the S&P right now, the current PE of 30, a forward PE of 22. So we had the S&P today finishing up by about less than 0.1%, 4,291. NASDAQ Composite at 14,528, a gain there of about 0.2%. Where the Dow is concerned, we were up 0.1% on the day. So if you look at what's going on in the variant space, Moderna today saying that its vaccine made protective antibodies against the Delta variant. Now, this has become one of the more prominent strains that we are seeing in the world. I'm thinking particularly in India, the UK, Australia now imposing a lockdown of its 3rd regional capital, and Hong Kong making a discovery of the variant, and as a result, banning flights from the UK. Cases are also rising in Tokyo with less than a month to go before the beginning of the Olympic Games. Today, Moderna shares at a record high, picking up more than 5%. Many of the airline stocks were down. That shouldn't come as a surprise. We had the S&P Airlines Group off about 0.7% today. In terms of deal flow, Advanced Micro Devices winning unconditional merger approval in the UK to buy Xilinx. AMD shares were up just about 2.8% today. Xilinx shares higher by more than 3%. Obviously, we have the employment report to do, or due on Friday, I should say. 10-year Treasury last quoted in New York at a yield of 1.47%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, really appreciate the update. Thank you so much, Doug Krisner. So we talked with our next guest, I think it was around last fall. It was a panel I hosted on global real estate, being in the eye of the storm. It was for the Milken Global Conference, held virtually, of course, at the time. He also then joined us on air live, giving us a global view into commercial and residential real estate. So delighted to have back with us Jonathan Goldstein. He's CEO at the London-based Kane International. They have properties around the world, in the UK and the US especially, hospitality, residential, and leisure. So he sees a lot, his firm does. He is with us on the phone from London. Jonathan, it is good to have you back. How are you?
I'm good, Carol, and how are you?
Hanging in there, trying to figure out the future like the rest of us. How are things in London? If I find out.
Look, yeah. London is, I was just listening to your governor there, and London's in a very similar position. Obviously, the Delta variant struck a blow, but I think people are coming to terms with it. We're seeing a much higher rate of infections, but thankfully, due to the very high vaccination rate in the UK, we're seeing far less hospitalizations and thankfully far less fatalities. And I think we all getting to the psychological point that we need to live with this. We all have to understand that this is not something that's going to go away overnight, but we can't stay in our houses forever. So we have to be careful. We have to look after one another. And I think that America is showing the lead in that way, and your vaccination program's clearly been very successful. And it's good to see slowly, with all the variants that are likely to occur and are occurring at this moment, the world returning to some level of normality. And I think that's really what we've got to aim for, because we're human beings. We're social animals, and I think the social animals are now very, very keen to get out and meet each other, and to see each other, and eat with each other, and play with each other. So
we like people.
That's what I think. Exactly.
But
we like people, and
Jonathan, it's a really good point. No. Forgive me, because I'm cutting you off. But it's a good point and an interesting point that you said about we have to understand that we have to live with this. This is not going away. And I was talking with a group of CEOs this morning about how our work world is shifting, or what is shifting, and what stays with us. How does it change? How do we interact going forward as employees, as employers? How do we do it with our customers? But the bottom line was, this is here to stay, and we will have more potentially viruses that are going to be problematic, and we have to figure out our way through. So we've got to figure out a way to live our way through it.
I think that's right. Look, I think we have to be respectful of each other, but that's always been the case. So maybe, this was brought into the world to teach us all to respect one another and be careful with one another and protect each other's space and not invade somebody else's territory. But I think that ultimately, at the end of the day, we're social animals. I think at the end of the day, people need to learn from each other. The businesses were not built in isolation. Businesses were not built in people's front rooms. Great communities were not built in isolation. And ultimately, human beings want to be with each other. So I think slowly, people will get more and more confidence that the cities will rebuild themselves.
So what
London
does that...
is slowly coming back to life, and I know that New York's probably ahead of that, and I'm looking forward to being there in 2 weeks to enjoy that.
Well, we look forward to hosting you in a couple of weeks. Tell me what this means for commercial real estate. I know we've talked about it before, and there's been lots of individuals coming out and saying, we're not going to need as much office space. And depending on the firm that you talk to, there are companies that are saying, yep, I'm going to let my workers choose how they work going forward. There are others, we see it in the financial community big time, of saying, nope, you got to come back to work. What are you seeing in terms of demand for commercial office space?
Well, look, first of all, there's no one answer. And anybody who tries to give one answer is glib. So, for example, we took a position back in 2016, 2017 that we believed Miami was right for growth. And obviously Miami is on fire at this moment in time. Our office development at 830 Brickell is doing extraordinarily well, with significant interest from investment firms and technology companies. Our residential products are, also selling very, very well. New York is a different story at this moment in time, but New York will recover, which is why we've invested and just decided to invest in a new office block on 57th Street. I have to say, I think it would be remiss of me to mention Miami and not mention the terrible tragedy that occurred last week in Surfside, and to pass on all the thoughts and prayers of us in England and everybody to do with Kane to all those people who have suffered. Which just appeared an absolute tragedy. So I think it would be wrong to mention that. And
Agreed.
It's a lesson that we all need to learn, that when we build buildings and when we develop properties, we are looking after people, that there are individual stories, there are individual people who live in that building, and safety and security and health and safety of the buildings that we build should be at the top of everybody's list.
Agreed. And, one of the things that has come out of that, and I agree with you, our hearts go out to the families and the people in terms of what happened in Florida, in Miami specifically. And I do wonder, Jonathan, we've been reporting, a lot of folks have, about climate change and the impact that that's having on maybe some of our coastal cities, especially where you're seeing large buildings. Do we need to be thinking, I'm sure you guys are already thinking about, as you build a property, the impact that climate change or rising sea levels can have on an individual property?
I think in relation to the disaster at Surfside last week, it's too early to draw a conclusion or a direct linkage between climate change and that building. Having said that, when you understand the Miami market and you understand that the longevity of a building is 40 years, maybe 40 years is showing itself now to be too long. Maybe one needs to look at it again, and maybe one needs to look at the regulations involved and say, actually, it needs to be sub 40 years or it needs to be built differently. So I think whenever a situation like this occurs, it's important that people take stock, look at what's happened, examine the facts properly and accurately. Because at the end of the day, I don't think anybody's in this business to create a product that is substandard. And as I said before, we're dealing with people's lives. And when you see the tragedy that's unfolded here, and obviously we've had situations in London. We had a situation just over 2 years ago where a tower block in Grenfell was set ablaze, and just any person to die is too many, but too many people died. So we've learned lessons, or we are learning lessons from the cladding or from the curtain wall, as you would call it. So I think it's important that we learn lessons. It's important that we take stock, that there are the right people who look at these facts, look at the situation, and that we learn from the process. But let me go back to your initial question, okay? I think that the important thing for us all to realize is that the world has changed, that we all have to be more flexible in our approach. But, and I put a very, very big but here, number one, working at home is a privilege for the privileged. I see too many people in my own business, too many people in the businesses in which we invest, who don't have the facilities that many of us have at home, who have to share wireless, who have to share computers, who have to share facilities. And their careers are being affected if they continue to work at home. Number two, the point that I made before, great businesses were not made in a vacuum. I mean, Bill Gates may have made his initial discoveries in a garage in Seattle, but how many businesses in the world have been created like that? Most great ideas come from a drink at the bar, or a conversation at the coffee machine, or a sandwich at lunchtime. That's how human interaction over decades has created great inspiration.
It's interesting.
And that is something that...
No, it's interesting that you say that. A wise man, Doug Krisner, actually said to me as I was preparing for a panel, taking a look at work shifting, and he said, a question for you, Zoom, which has become so ubiquitous during the pandemic, was that created in a vacuum, or was it created with people collaborating, in the same space? And there is that question of whether innovation can continue when people are working so remotely. Having said that, though...
Carol, I'm tired of Zoom.
I'm tired, Jonathan.
I'm tired of looking at people on a screen and staring at my PC and thinking that's the way I should live. That's not a way to live. That's not a way to enjoy people. That's not a way to learn from others. Look, if I look back at my career, how have I learned the most? I've learned the most by being mentored by great people that I could watch. I could pick up their strengths and I could watch their weaknesses.
But Jonathan,
I could learn from them.
But there are a lot of workers who are telling their leaders that I like working from home. And that's why you have Synchrony Financial come out and giving workers 3 options: work at home, or maybe you occasionally rent a space, basically in the office, or you have a space in the office. What are you seeing in terms of demand that says to you, nope, it goes back to the way it was, or, well, it's going to be a little bit differently? And we've only got about a minute left here.
We're seeing about 45% of our people in the office at this point in time. It's growing week on week. And I think come the end of the summer, we'll see most of our people in the office at least 3 days a week out of their own choice, because they see the benefits they get and the enjoyment they have, the facilities that a city offers. Look at what New York offers. And you don't get that benefit by sitting at home. And I think the most important thing we need to remember and realize is that great communities and great cities offer a vibrancy and excitement to people that you don't get in your front room. And I think ultimately that's where people will migrate back to.
No, that's a fair point. And I know people for years, decades, have talked about demise of cities only to see them come roaring back even stronger. Jonathan, you always give us a bunch of things to talk about. So good to hear your voice, and good luck with your trip to New York in a couple of weeks. Jonathan Goldstein, he's Chief Executive Officer at Kane International, on the phone from London. Coming up is Sound On with Joe Matthew, and Joe and his guests. What are you talking about?
We're talking about, go figure, infrastructure. But today, it's the road show. You might have seen Joe Biden. I think we were talking about it earlier in La Crosse. Had an ear on the speech. We're going to talk about it coming up with a Republican congressman as well as the Democratic mayor of Washington, D.C.
Yeah.
And we're digging into antitrust matters later on. A lot ahead this hour on Sound On.
I know. It's a busy summer day there in D.C.
It's hot, too. Is it that hot in New York?
I haven't been outside since this morning. I've been staying in the AC. Joe, have a good show. Joe Matthew with Sound On coming up at 5 p.m. Wall Street time. Have a good and safe evening, everyone. Stay cool. This is Bloomberg.